Line. Atos also in focus, guys. We focus on French assets, but this one for a different reason. It's agreeing a restructuring pact with creditors, converting nearly 3 billion euros worth of bonds into equity. Creditors also providing new debt. So one way or another, French assets in focus.
Absolutely. I have two questions going around my mind right now. How long does it take French stocks to open, and how high will they open? There it is, the opening trade. Let's talk about exactly where we are with European assets this morning. The number you really want to focus on is what is happening in France. What does the CAC 40 do first thing this morning? But as you can see, the early indications are that European equities are out of the gate with a positive tone. The FTSE 100 is up. The DAX is up by 0.2%. The Stock 600 may be giving you an early indication, because there'll be some French stocks in there, as to how the French market is going to open. I suspect this morning, though, it could take a little while, maybe, for French equities to get going. So I'll park this graphic for now. Kriti, let's talk about what else we're seeing. We'll wait for those French stocks to get going.
Well, let's start with the FTSE then, because that's where we are seeing some green on the screen again as we wait for that liquidity to show up in the French markets. Right off the bat, you are seeing some of the commodity names rally, Anna. When you look at the index contributions, the likes of Shell, BP, for example, even Glencore is higher alongside some of the banks, HSBC, Barclays as well. These are the names that seem to be leading the rally in the UK, but it looks like we are starting to get some of the opening trades on the French index as well.
Yes, really interesting. You mentioned what's going on with energy names. I see the oil price is higher this morning, up by 0.7%, up by 0.75% at 85.64. Oil gains with a focus on China's economy and those geopolitical risks. So we'll certainly return to the China theme. It has perhaps been undermentioned by us in the past hour of the programme, but certainly we've had some growth data out from there. We don't yet have an open on the CAC 40. We do see the FTSE up by 0.7%. We see the German market up by 0.2%, but all of these feel to be something of a sideshow as we wait for the French stocks to get open this morning.
I can't see a trade on SocGen. I wonder whether it's just SocGen that is keeping us from opening this morning. I can see just about everything else on the CAC 40 trading, but it looks like the French market has yet to fully open, because some of the big banks, we've yet to see a first trade going through on some of those.
Well, we're going to keep certainly an eye on that, but let's talk a little bit about just what one of our previous guests at the start of the show was talking about, Peter Dixon, really weighing in on what this relief rally may actually mean. Take a listen to what he had to say.
It's a bit of a relief rally in a sense, because maybe Le Pen or the RN didn't do quite as well as many people expected. There's certainly talk now of the centrists and the left trying to do their best to block the RN out of the out of Parliament, which I suppose is going to give investors some hope. It's not necessarily good for French democracy, and of course I think that will cause bigger problems down the line. But in terms of where we are now, and in terms of what we've got to look forward to next week, I think markets are hoping that it will not be an RN-led government, and I think that's giving them some succor at the moment.
Peter Dixon, they're the head of EMEA country risk at Fitch Solutions. Speaking earlier in the program about what that policy story may actually look like, let's bring in another voice. Joining us now, Sebastian Rayler, head of European equity strategy at Bank of America's Global Research. Sebastian, a pleasure to have you. Welcome to day one of the new show. We appreciate it.
Do you like it?
Yeah, that's the highlight.
Especially, we heard you were coming, so we bought a new table.
Are we all going to run around the table now?
You can do that if you like.
In the break. Sebastian, we've seen a lot of green on the screen right out of the gates. At least we're still waiting for the French indices, but it looks like set up for a positive open. How long does that last?
Well, it really depends on what happens with the main story we've been discussing with Guy and Anna and you over the last couple of months, namely, how does the macro cycle hold up? We've seen some incipient weakness in the euro area. We see the US slowing. So if all you get is some relief on the political front and the macro cycle holding, then the markets can go back to the previous highs. If, on the other hand, we are very late cycle, the unemployment rate in the US is rising, then you have to restore a risk premium that is not in the price at the moment, and then you get another negative catalyst basically waiting around the corner.
Well, before we get into that negative catalyst, I just want to mention that the French index is officially open, higher by 2.6%. It looks like some of the individual movers as well. BNP Paribas, for example, some of the banks rising as much as 6%. SocGen, however, and Atos both halted at the open. Also mentioned
SocGen's open now.
Oh, SocGen's open now. My bad.
Up by 7.5%.
There it is. Okay, so the
Inside.
banks lifting the entire index higher on a sector basis. Sebastian, how do you play the banks?
Well, again, I think it depends on the outlook for the macro cycle. But before we go there, I want to say it's a great restart of the show with such a party. There's fireworks and basically we got everything we hoped for.
I'd like to say we planned it that way, but
you did that very well. Smoothly played.
Emmanuel Macron helped us out a little bit.
There it is.
I think he cares a lot about the show, clearly. So on the outlook for the banks have really thrived over the last 3 years because you've seen bond yields rising sharply and risk premia, look at the high yield credit spread, going to all-time lows. If you want to have further upside for the banks, you have a story to tell of why bond yields will continue to rise or risk premia will continue to compress. And at these levels, it's very hard to see that. On the other hand, if the macro cycle weakens, central banks start cutting and some risk premium is restored, then this outperformance that you've seen over the last 3 to 4 years will start to roll over.
What is in the driving seat, Sebastian, for French assets into the weeks and months ahead? Because we're talking here about a very idiosyncratic French story,
right.
and then you're taking us back to the sort of bigger picture European backstory. And I wonder which will be in the driving seat. Will it be French politics that continues to drive the banks, the construction businesses that we see rebounding so strongly this morning?
I mean, I would make 2 points. First of all, the market is rallying today, but if we take a look at what has actually happened, it's very hard to sell this as good news. What you had is a scare and a sharp underperformance by the French index, not so much by the banks, but by French equity specifically. It's hard to argue that you got a good outcome. Maybe you block a majority by the hard right, but in the best case scenario, you get a hung parliament that effectively means very little decision making, no ability to deal with a very wide budget deficit, and also the European integration story effectively put on hold. That is effectively the avoidance of a bad case scenario, but by no means a good case scenario. So I think to come back to your question, if the macro cycle rolls over, that's going to be center stage. If it's all about French politics, it's really about, there's no upside. It's really about having avoided the worst case.
And if the macro story rolls over, where does that rollover come from? Are you talking about the US and what happens to the US consumer and how that filters through into European stocks, or is it something more homegrown?
I think it's both, because in our understanding, and of course we've discussed it many times, the main driver of the macro cycle is monetary policy. It takes a while for this to feed through. Very interestingly, we've seen the European credit impulse, the euro area credit impulse, just turn negative again, and that suggests that you're now seeing both in Europe and the US, as this huge support from US fiscal stimulus last year is starting to wear off, you see this kind of sagging of the macro momentum, and we really have to see how far does that go. But with the unemployment rate so low and rising, it's not inconceivable that we're getting towards the end of the cycle, and of course, that will then be the main story.
Why do I want to own European stocks when I can buy Nvidia?
I think you want to own European stocks if you think either the value trade is on, i.e. bond yields rise, or there's going to be a strong domestic growth outperformance in Europe and the US, but I think we'd be hard-pressed to believe in anything.
But I'm still going to underperform Nvidia. This is the problem that everybody's facing right now in their portfolios. You've got a small group of US stocks that are massively outperforming and basically skewing. You've either got it or you haven't in your portfolio. Does it really matter? If I don't own Nvidia, does it matter what I own? If I do own Nvidia, does the rest of my portfolio really do anything for me? This is the question that everybody's trying to figure out at the moment. And where does Europe fit into that narrative?
I mean, there really was a very plausible case being made for being long European equity. So
there was. That's in the past tense, though, isn't it?
For me, it's in the past tense, but if you look at our fund manager survey, it's a very prominent product we've got. And there are people saying, you're already seeing the signs of macro weakness in the US. You don't see it until very recently in Europe. US equities are very expensive. If you now get the growth leadership globally handed from an exhausted US to Europe and you're on very low valuations, isn't that the next leg of the trade? Now, personally, I don't believe in that story, but it is a story and it's a plausible take on the situation.
Okay. In order for let's talk therefore about what I do next. I've got a France that's probably going to struggle. I've got a Europe that, by extension, is likely to struggle as well. I'm trying to figure out what I do next. You don't believe in the narrative that Europe outperforms. What am I doing right now?
Yeah.
Where am I putting my money?
Yeah, and I'm basically saying you're at the top of the cycle. If you have a checklist for the top of the cycle, say unemployment rate at an all-time low, risk premium at an all-time low, U.S. savings ratio at an all-time low, equities at an all-time high, cyclic at an all-time high.
You're telling me where not to put my money?
No, I'm telling you, this is a great environment, A, for bonds. If you get the macro cycle rolling over and inflation is clearly fading, and we have many teams at Bank of America, and that's the consensus across the board. There's a big rally in bonds. Secondly, gold has rallied, but would still do well if rates come down.
So the equity guy is telling me not to put money into equities.
And then, if you want an equity story, so I don't lose that part of my job. There is a big opportunity in defensives. Look at staples in Europe. At a 12-year low, cheapest sector in the market, underperformed by 30%. If you have a relative value trade, you will look back at that and say that was a trading opportunity, entry opportunity of a lifetime.
So let's bring it back to where we started this conversation then. If you are this positive on bonds and saying that should be the move, I'm assuming globally, isn't there a positive read-through into the banking sector then, not just in France, but then broadly as well?
Yeah. So there are basically two aspects. On a relative basis, whenever bond yields decline, so bonds do well, bond yields decline, banks always underperform. And currently their price relative is at a 5-year high. And then you say, okay, but in absolute terms, they might still do well, maybe slightly less well than the market overall. And then it really depends on, do bond yields fall and risk premiums stay where they are? Then all equities do well. But if central banks cut partly because the labor market rolls over, partly because the consumer is weakening, then risk premium go up. And that's an environment where all equities do poorly, but banks would be underperforming.
So in this environment where we're talking about 1,000,001 tailwinds, you're talking about monetary policy driving it. We talked a lot about the geopolitics, talked about the U.S. Let's talk about China for a second. On Thursday, the EV tariffs on China kick in from the European Union if no 11th hour deal is actually made. We talk about Chinese consumer read-through into some of the luxury stocks. Do we pay more attention to China then as the next catalyst for what happens to European equities?
I don't think China will be a catalyst. Domestic demand is very weak. You already highlighted that consumer confidence is very, very low. You still have significant overhang from the property sector. It's unlikely to go away. I think the best thing that can be said about China, it's the only of the 3 major regions that doesn't have to digest this overhang from delayed impacts of monetary tightening. So on a relative basis, we think it will hold up better than, let's say, the US or the euro area. So on a relative basis, maybe you want to look at luxury stocks, who, of course, are a relative trade on China. But in absolute terms, I think it's really about the US, does the macro cycle hold up? And Europe, does the political cycle hold up? I think you're right not to have mentioned China. I think it is the least interesting of the stories right now.
Thank you. Thank you for justifying my oversight earlier. Sebastian, talking about inflation, and you said, I think earlier, that the inflation, inflation is clearly fading, and that does, disinflation has been a theme for some time, and now we get to arguing about just how low it gets before maybe it bounces again. I don't know. But I was interested, actually, we get European inflation data tomorrow, I think. I was interested in a piece by John Authers this morning where he's looking into the detail of what consumers think inflation is going to do over the next 4 or 5 years in the States. And actually, there's quite a lot of evidence that, sure, some people think it's coming down still, but a lot of people are so affected by the inflation story we've been seeing over the last few years, they're not watching our show every day, and they think that inflation is maybe going to be much higher over the next 5 years. I wonder how that comes back to haunt us.
Absolutely. And I would say, when I say inflation is fading, I want to admit it's a contested issue. There are some people who say, look, this is the 1970s, inflation dropped, and there are all these great charts on Twitter. And what we are saying is the best available framework that we have links inflation to supply chain stress. And ever since the inventory cycle rolled over in the middle of 2022, supply chain stress has been declining, and that suggests a continued disinflationary trend in Europe and the US. So what we are seeing on the macro front, and that's for us the most interesting story, even more interesting than European politics, there's a race on between the weakening of the macro cycle and the fading of inflation. If inflation fades first and the macro cycle holds up, then there's a near-term boost still to equities. But if both happens, that's A, very good for bonds, and B, a net negative for equities.
Talking about supply chains makes me think of freight rates, and I know that you were just recently looking at how they've actually been ticking up again.
And it makes me sound very excited.
Worrying.
Freight rates have gone. Yeah, freight rates. Take a look at what a box out of Shanghai costs, and it's a lot. We're not all the way back to the pandemic levels, but we're getting up there.
What are you shipping from Shanghai?
That's a whole different story. There's a side hustle going on here. But I shouldn't be excited about China. If inflation does hold up, how big an effect? When are we going to see that effect into equities? When are we going to see US equities, which don't seem to care about anything right now, other than AI? When are we going to start seeing some of those effects showing up? If we don't get the rate cuts, if we don't get the benign outcome?
I think it really depends on the rate of change. So you've got a 2-by-2 matrix, the growth outcome and the inflation outcome, higher, lower for both. So the market is currently pricing for Goldilocks, which basically means growth stays strong and inflation fades. So if you go to the other box, which is the biggest concern that markets have, which is higher for longer, inflation rises again, maybe you price a scenario where no cuts are forthcoming and maybe the Fed hikes again. But we only have around 1 cut priced anyway for this year. So it's a little bit of an increase in the discount rate. Maybe the market goes down 2-3%. So there, I don't think there's really any delta. If you just get inflation basically not coming down, you're pricing out some cuts. The real delta from here is either if the risk premium gets massively compressed because you get a tech bubble and a productivity boom and you're replaying 2000, that's really what our clients see as the main upside scenario, or you get basically the rollover in the macro cycle and the risk premium rises. So from here, I think inflation is exhausted as the main story. It's all about the risk premium.
When you walk into a meeting and sound bearish, do people believe you?
I think what people are saying, and that really, because we've been selling this story for a while, I'm always like bracing and they go like, oh, this also. What people tell me is, we have a lot of sympathy for this intellectually, but we're managing money day to day, so therefore we don't quite know why everything is held up so well. But we have to basically dance as long as the music is still playing, but we're waiting for this scenario to materialize, and we're ready, but we can only put the trades on when we see clearer signs.
Okay, but it seems to be French music that's making the markets dance this morning. Sebastian, thank you very much. Sebastian Riedler, Head of European Equity Strategy at Bank of America Global Research. Let's get an update on where those French assets are moving this morning. The rally in French stocks, it kicked off 15 minutes ago, and Joe Easton has an update on how far we've come. Joe.
So the French assets really driving the story today, Anna. Looking across the stock 600, the top 30 gainers, pretty much all of them are in France. You can't find many stocks that aren't in France in those top leaders. We've brought up the banks here. SocGen gaining the most in 2 years today, rising 8% at the open, coming down slightly. But we've got Credit Ag as well, up almost 5% at the moment. But we've brought up some banks in other countries as well. Deutsche Bank and Santander, we can see those lenders gaining too. The sentiment feeding through into other countries this morning, not just France. But of course, the biggest movers are on the French markets. We brought up some of the stocks that we had in stocks to watch earlier as well, with the firms exposed to government contracts. Vinci, the airport company, Engie, also the utility firm, and Edenred, the voucher firms. Those stocks all getting that boost, with Le Pen making smaller grounds than some people had predicted in those first round of voting. We've got Atos down the bottom, that restructuring announced with some of their creditors. Around €4 billion being pumped into the company, the French software firm that's been hit by those accounting issues over the past few years. Really needs that boost there. Here's Anglo-American declining. That was down as much as 4% at the open. A fire at a coal mine over in Australia over the weekend. Importantly, nobody was injured in the fire, but it is worth around 3% of the company's group profit, according to analysts at Citi. And as we mentioned earlier, they are looking to sell that asset as part of their restructuring following the fallout of the BHP attempted takeover. That stock coming down at the moment. Then we'll look at a couple of UK home builder stocks, because we did get some data earlier today showing house prices in the UK up once again, up around 1.5% over the past year, showing resilience in demand for UK homes. Of course, we've got the UK election coming up. Housing is a key focus of that, with Labour pledging to build around 1.5 million homes in their manifesto. But we're getting a boost ahead of that election following that right move data, as I say, showing resilience in the UK housing market. A couple of morning calls to bring you back in UK real estate as well. We've got Land Security. This one is upgraded at HSBC as they see the benefits of falling yields coming into the real estate sector. That one gaining 2.9%. This is, of course, the office company with lots of offices around London. So that's a decent gainer on the UK market today. And one going the other way over in chemicals. This is Akzo Nobel, the maker of Dulux paint. Goldman Sachs downgrading this one, seeing some weakness in the DIY market and also some raw material costs coming up as well. That one's declining 1% over in Amsterdam. Goldman Sachs downgrades Akzo Nobel this morning.
All right, Joe Easton from our equities team, we thank you so much for walking us through those initial moves when it comes to how this kind of French story is playing out in the markets. Guy, a check on your sensational six.
Well, there's a few French stocks in there, so let's talk about those. And LVMH front and centre this morning. It is having, as you can see, a very good day, but it's really the French banks that are driving the stock story higher in Paris. Schneider is up very nicely as well. Even Air France is tracking a little bit higher this morning.
It was a good day for that news.
It was. But if you take a look at the 3-day chart, Thursday, Friday, and Monday, you'll see that it hasn't filled the gap, basically, from the sell-off we saw at the get-go of trade on Friday morning, which was generated by that Barclays note. So, yes, it is higher, but not by much. So that's the narrative out of France this morning. Credit wants to talk about banks this morning from a different way. We're going to be doing that in just a moment. We're going to be coming back talking about BBVA and talking about what is happening with this transaction that it is pushing forward. You've been speaking to the chairman, Carlos Torres. I'm really looking forward to hearing what he has to say. We'll do that in just a moment. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back to the opening trade. We're about 22 minutes into today's session. We're seeing green across the screen, perhaps a relief rally, perhaps paring back some of the losses that we saw last week ahead of that geopolitical risk. But look, the party may stop, it may not stop. We don't know because we still have that geopolitical risk overhang. We're going to keep you apprised of all the market moves. But in the meantime, I'm going to nerd out for a second because I love that I can finally play my Spanish correspondent hat with pride on what is going to be potentially one of the biggest domestic deals in the last couple of decades for all of Europe. And of course, the largest European banking transaction this year. I am talking about BBVA's takeover bid for Sabadell, about a 10.5 billion euro transaction. Here's why it matters. This is really, really significant, again, in terms of the size of the deal, 10.5 billion, but also talking about the fact that Sabadell has already voted no on Friday. BBVA coming in and saying, look, we have an AGM. We're going to try to get our shareholders to approve what's going on with Sabadell for an exchange, by the way, of about one new issue BBVA share for every 4.83 Sabadell shares. This, of course, comes on the fact that Sabadell thinks that offer price is way too low, and simply they're already planning buybacks and shareholder return. BBVA chairman Carlos Torres Vila spoke to Bloomberg and explained where the savings are coming from. 850 million euros, he says. Take a listen to the breakdown.
The bulk of the savings have to do with technology savings and overall general expenses. The banking sector is undergoing a process whereby, because of digital, because of the importance of cyber protection, availability needs, preventing data loss, data fraud, data theft, I should say, and meeting all the stringent requirements that the EBA puts on the banks. All of that, plus the data and AI wave that we're under, all of that increases the weight of technology, and technology is fixed cost. So by being larger, having larger scale, you can spread that fixed cost over a bigger business and therefore be more efficient.
Okay, so that's the kind of the industrial logic as you put these two companies together. Then they fit into what? What does the macro picture look like? Kind of why are they doing this deal now?
Well, he actually said they've tried to do this deal before back in 2020, and COVID ended up being the enemy. Their enemy was time. He said that's the biggest hurdle to it. But right now, the Spanish economy, the European economy is resilient. Remember, this is the second largest bank in Spain, trying to acquire the fourth largest bank, but it only works because the macro is in its favor. Take a listen to what he said about the Spanish economy.
Spain is set to grow at 2.5% this year, when Europe is growing 0.7%. Next year, 2.1%, when Europe is growing, we hope, 1.4%. So significantly higher rates of growth on the back of population growth, employment numbers, record level, tourist revenues are very strong, non-tourist exports, very strong. I could go on. Spain has really good performance on the macro level. Also, we're set to see credit increasing in penetration, credit penetration increasing after many years of deleveraging. Spain has deleveraged 35 percentage points in terms of the debt over GDP, both on the household level as well as on the corporate segment, etc. So Spain, very positive story.
So a very positive story. So we've underscored why he thinks the deal makes sense and the sort of Spanish macro themes. So what are the hurdles?
Well, he's got a couple of them. He's got the politics. He's got Pedro Sanchez, of course, the Prime Minister of Spain, not a fan of this. You also have the CNMC, the Antitrust Authority in Spain. It's basically saying if there's more consolidation when it comes to things like interest rate stories, there is going to be a ripple effect into the end consumer. In addition to the U.S. political story, he's saying U.S.-China tensions going to play into the Mexico story as well. They have a massive exposure. Almost half of their bank revenue comes from Mexico. We're going to have more on the markets next. Stick with us. This is Bloomberg.
CFOs are reshaping the C-suite, Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power.
In accordance with our principles and consistent positions in all previous elections, nowhere will we allow the national rally to prevail.
Some of the political reaction from the first round of voting after we saw that snap election called by Emmanuel Macron. I guess the only real takeaway from this weekend is that that may have been something of a tactical error. French assets this morning are bouncing, but take a look at the slightly longer term since that election was called, and you may see a different picture. But this morning, we're certainly seeing French banks, some of the industrials doing very, very well. The CAC 40 is up by 2.26%, but I urge you once again to take a look at the longer term story. Delphine Arnaud, multi-asset and overlay portfolio manager at Edmond de Rothschild, joins us now from Paris. Delphine, thank you very much indeed for the time. The French markets, French assets seem to be bouncing this morning. Is that the right reaction?
Thank you for having me on stage in the middle of the road in front of the Parliament. Yeah, the market rebound is very strong this morning, and the word I heard the most this morning is the French expression "c'est compliqué." Actually, yes, it's complicated. It's a complicated election, but the result we had yesterday evening and during the night allow us to explain this rebound, because we can avoid certain scenarios we've drawn before the election, and we can explain this rebound.
Okay, so we didn't get the big win for the rally, and I think that seems to be what everybody's taking away from this morning. But if we do, so can I assume, therefore, that if Marine Le Pen does win next weekend, the French markets are going to be, the French assets are going to be in a much worse place? This morning we have uncertainty. It's complicated, as you say. But once we get clarity, what do you think is going to happen?
We already have a certain amount of clarity. First, the worst case scenario can be avoided. The worst case scenario for the markets was an absolute majority from the left union. This was a low probability but high impact on the market because of high fiscal expenses. This scenario has been avoided, and it's a bad news avoided, so it can be a relief rally and a leading short squeeze in the French market. Another bad news that seems to be avoided is Rassemblement National, national rally, avoiding to the absolute majority also. It's not out of the table completely. The main the view will be will gain clarity at tomorrow at 6 when we have the final list for the second round. But this second worst case scenario has already been downturned before the election, because when they allied with the right party and Eric Ciotti, they reduced their expectations regarding the retirement reform. They wanted to come back at 60. This kind of fiscal expense was really downward before the election. So, and unfortunately for the market, there is a scenario that was rosy, that was the good scenario, which would have been like in Spain last summer. The presidential camp would expect, he would have liked to have a majority. This scenario would have been good for the market, but unfortunately, it's not, it seems a bit complicated for him to reach a majority. The agreement that they will reach until tomorrow at 6 will help us to know if another scenario comes to the table, which would be good in the short term, but awkward in the midterm. It's a gridlock scenario of a technical or broad majority, Republicans, left, center left, which would lead to more rational in terms of fiscal budgets. But also it should depend on the agreement reached tomorrow.
Well, Delphine, you talked a little bit about that pension reform and, of course, the core story of the deficit. Let's talk a little bit about one way to tackle it. Can you price in the risk of increased tax hikes or increased tax policy? Is that something that's even on the radar from an investment point of view?
The increase in tax rates, you can't really price the effects. It's a Keynesian program in an environment that doesn't need any Keynesian program, because currently we don't have a shortage of demand. We have still, after the COVID and the inflation crisis, we still have supply constraints. So we don't know really the effect neither of the tax increase and neither of the minimum wage at 160 and 600 euros. It will be a very Greek-like program when Tsipras came into the power, but then you're gonna have a reality check. You have the fiscal budget that has to be voted in the autumn, and in the meantime, I think this kind of fiscal expenditure will have to pull back because it's not really realistic. Our worst case scenario for really big fiscal expansion was 120 on the spread OAT and below 106 on euro dollars. And this is something we can avoid if we have a technical majority or a broad central majority. This is something that will not come up in the parliament.
Okay. So Delphine, so we avoid those outcomes from a market perspective. I was interested in what we heard from Gabriel Attal, who said, the far right is at the gates of power. Our objective is clear: to prevent the national rally from having an absolute majority. So now we see Macron's party and the far left in conversation. What should the market watch for in those conversations? What are we nervous about?
What are we nervous about? He said that he won't ally, Macron's party will not ally with all the left union, but the majority of the left union. And what's left aside, it's not the LFI, the far left, it's only the LFI with certain positions. And these positions are not about economics. These positions are about ideology, for instance, anti-Semitism, or things like that. And so in that case, the fear for the market is that there's a lot of LFE candidates joining to the parliament, not a very strong position on ideology, but very strong position on economics, and will block any decision in terms of fiscal budget reduction.
Okay, Delphine, thank you very much. Thanks for your time. Delphine Arnault, multi-asset and overload portfolio manager at Edmond de Rothschild. Delphine, thank you very much for that. Really interesting, Delphine, reminding us that tomorrow evening is when we will find out who exactly will be running in the second round, which will be useful for the markets. Let's stick with politics. Hungarian Prime Minister Viktor Orban has announced the formation of a political alliance with nationalist forces in Austria and the Czech Republic. The new group is seeking to become the largest right-wing grouping in the EU. Let's get some analysis. Joining us now for more, Bloomberg's from Bloomberg this morning, Andre Gergely. Thank you very much for being with us. So just how fractious has the relationship between Viktor Orban and the rest of the EU become?
Right, so Orban just really thrives on creating international tension because it suits him to keep Hungary in a constant campaign mode domestically and in his electoral base mobilized. So that's how he's been winning elections for the last decade and a half, and that's, as you say, has been kind of an overarching theme of his relationship with the EU. And in turn, the EU has kept pressure on him for eroding checks and balances and running Hungary sort of effectively as a one-party state recently. And that has caused delays in some of the most important initiatives in the EU and also NATO when it comes to assistance for Ukraine and NATO expansion. Yeah.
Okay. So we begin the 6-month rotating presidency with Hungary at the helm. The catchphrase we understand for this rotating presidency led by the Hungarians is making Europe great again. Make Europe great again. How is this going to be achieved?
Yeah, so that slogan, of course, is a tribute to Orban's sort of personal ties to Donald Trump. And as you say, it signals a sort of hectic period ahead for the EU while Orban is at the helm of the bloc. And Hungarian officials have been quite notorious for vetoing those major deals in Ukraine, but also making even sort of basic diplomatic activity in the EU fairly difficult on a day-to-day basis. At the same time, the EU majority has often found ways to get around that and Orban's vetoes. So when Orban felt cornered, he sometimes just literally sort of shuffled out of the room and quietly let the others make decisions and sort of abstain.
Andras, thank you very much indeed. We're going to look forward to seeing exactly what this is going to mean. I suspect, as you say, it could be a bit of a bumpy ride. Andras Gögle joining us on the Hungarian presidency. What are we going to talk about next? We're going to talk about another presidency. The US President Joe Biden vowing to fight on for another 4-year term. We're going to get the latest on what could be an interesting week in US politics. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have 2 assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Could face bigger challenges next.
It was going to keep Great World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Take to keep the world safe and free for the years ahead. Folks, I give you my word as a Biden, I would not be running again if I didn't believe with all my heart and soul I can do this job. Because quite frankly, the stakes are too high.
President Joe Biden there on his commitment to winning November's U.S. election, coming from his comments at a rally in, well, Raleigh, North Carolina, for some irony there. Let's bring in Bloomberg's Derek Wallbank, a longtime U.S. political watcher, joining us this morning. Derek, what do you make of all of this? I mean, it's really challenging, and the bar is very high for someone to do a swap like this. How much peril is the Democratic Party really in right now?
Well, I was thinking about how to respond to what I assumed that this question would be. And what I'm going to go with, we have a story on the Bloomberg right now and on the web by Justin Sink and Amanda Gordon. Let me read you verbatim their second paragraph. Quote, not my words, their words. Quote, the strategy will be remembered as a display of either remarkable foresight or incredible hubris. This is because Joe Biden right now is facing all sorts of whispers, speculation, rumors, a little bit of nudging here and there to really consider his position because of what was a very difficult first debate against Donald Trump, particularly the first 20 minutes of that. Now, the Biden White House has tried to come out and say, look, you know, don't just focus on that debate. As Kamala Harris, as vice president, said, I'm not focused on 90 minutes. I'm focused on, you know, what's been happening the last 3.5 years. Okay, fine, but there is a certain restiveness within the Democratic base, and we do have some polls showing. CBS News did a poll that showed somewhere in the order of 3/4 of voters thought that perhaps it was time to step aside, including nearly half of Democrats. So there is that pressure. The thing is, though, is that Biden has this nomination on lock if he wants it. He's got the vast majority of delegates to the convention. It's hard to push him out. It's hard to see a scenario where that could happen. And so if Biden is to step aside, it will be him that's doing it. And he has said forcefully, that's not going to happen.
Derek, who is Joe Biden listening to right now?
I think he's listening to his family. I think he's listening to his wife, First Lady Jill Biden. He's got a couple of trusted advisors. He does have some people that he reads a lot who have actually suggested that he go, but some of his closest political friends, Jim Clyburn, I'm thinking of out of South Carolina, have stuck by him. And remember, Joe Biden is also a guy who, when he was campaigning for president 4 years ago, had some real stumbles out of the gate in that electoral process, had some people saying he ought to go. And he is a real big fan of the idea that people have underestimated him his entire political career. So it's not like Joe Biden has a large group of politicians that he listens to. In fact, he would say that some of his best political moments have come when he has ignored the Democratic crowd.
That's interesting in itself, isn't it? Derek, thank you very much. Bloomberg's Eric Warbank with the latest on U.S. politics. Plenty of politics on display this week. Let's get a quick update on what we expect will be in the mind of market participants this week. We'll start with the ECB's forum in Sintra, of course. We get plenty of data out this week, including ISM manufacturing from the U.S. CPI inflation on Tuesday from the Eurozone will be an interesting one to watch. We'll get the Fed's minutes that day, middle of the week as well. Thursday, we have no trading in the United States. We have a UK general election taking place. And on Friday, of course, the US jobs report. We'll talk about some of these data points perhaps in just a moment. But if I could just linger on the theme of UK politics, our colleague Ellen Milligan caught up over the weekend with the leader of the Labour Party, Sir Keir Starmer. He wants to be, of course, the Prime Minister in the UK. We'll see how the voting goes on Thursday. She caught up with him and she discussed with him a range of subjects from tax to growth. Let's listen to what he had to say about populism, though, because this is interesting, the extent to which the UK is perhaps going in a different direction from the dominant vibe we've seen in other parts of the world.
We've seen the rise of populism and nationalism across Europe, across America and other countries, and it is very important that we make the case that only progressive democratic parties in government have the answers to the challenges that are out there. I think there are more global challenges now than there have been for many years, whether that's conflict, whether that's poverty, whether that's climate, whether that's energy, you name it.
It's an interesting one, Guy, isn't it? He says that only progressives have the answers. That's his standpoint. Of course, somebody else is perhaps going to have more levers or more access to the levers of power in France than the progressives that he would like to see there. In the UK context, though, you could argue that maybe the UK has dabbled in a little bit of populism already and is backing away from that slightly, and that's what we're seeing now.
We're about to find out. In some ways, the interesting aspect of this election coming up is not how the Labour Party forms. It feels like, in some ways, the Labour Party is going to be a protest vote for many people because they want to get rid of the Tories. The interesting thing about this vote, I think, is going to be about how Reform does and whether or not that party at the right fringe in the UK has momentum. And if it does, that's going to be really interesting as we progress towards the next Parliament, not this one, the next Parliament, and what happens there. And I think if Starmer wants to head that off, the clearest way he can do that is by delivering growth to the UK economy. And that, I think, is where the real challenge is going to lie. How can his party, how can his policies develop more growth, given the relatively cautious approach he's taking in terms of policy thus far? This is what he had to say on growth.
Growth is the number one mission. That's why our manifesto is a plan for growth, for wealth creation, for making sure that we are better off. The ambition we've set ourselves is the highest sustained growth in the G7, sustained being an important word there. We're not just measuring on a sort of one-off, it's got to be sustained growth. I'm confident that we can get growth.
Confident we can get growth. How does he achieve that? I think is going to be really interesting. And Dan Hansen and Anna Andrade have written a really interesting piece this morning talking about how you can change the fiscal rules in the UK and rewrite those rules to allow more spending, particularly when it comes to what happens with investment in infrastructure, particularly green infrastructure. So it's going to be really interesting to see kind of with a big majority whether or not they do that and are able to maybe turn that into actually a higher growth rate. But it's a really big challenge.
We talk about as well, as Anna was pointing out, this kind of move more towards the left in the context of so many other places in the world really shifting to the right. Thought it was interesting that even Keir Starmer, I think it was over the weekend or maybe at the end of last week, had also said we're actually not going to hike up taxes on things like banks, for example, where so many of the countries right now are talking about things like windfall taxes on the banks as well.
In that same conversation, I think that was with Ellen Milligan. Interesting, to your point, Guy, about where the growth comes from, the CBI saying today that the UK could get a £57 billion economic boost by going green. They're looking at the growth within the green part of the economy, saying business grows, saying that the green economy is growing at 9% a year. So trying to channel a bit more. The difficulty is they had that plan. They had to rip it up because there just isn't the money. There isn't the fiscal money. So how much they get the private sector on board with that will be crucial.
Okay, two things there. If they change the rules, there probably could be the money. There could be more money. Maybe not 28. We'll see. Maybe it's 20. The multiplier is really interesting. They think the multiplier, the crowding in effect from the private sector, could be really high. I.e., you put £1 in, you get £3 crowded in. The Dan Hansen and Andrade piece suggests that actually it's more like 50p. So the multiplier effect is not as great, but still there is some effect there that is going to come through into the economy. So spend more, get a crowding effect, get an infrastructure story that may be similar to what we're seeing in the United States.
Yeah, it's a multiplier effect, but it's also, I'm curious about the delays there, right? I mean, hasn't Anna Andrade on this program made the point so many times that the reaction function, especially when it comes to things like the BOE and monetary policy to the fiscal, is far more sensitive and far more immediate than you've seen in some
They have to come out of the gate really quickly to get this done.
We have a lot of other things to focus on this week. We have data out of the US. We'll end this week. It's going to be a long week. It'll feel every day. We'll feel it. We're going to get to Friday, and we're going to be waiting for the jobs report. We've had inflation data out of the US at the back end of last week. We'll get the Fed minutes in the middle of the week. We'll get a Eurozone inflation tomorrow. So there are data points to watch for. And for the moment, the French story really, continues to dominate.
What's the trade here? And I mean, it's because it feels like when the geopolitical politics are so uncertain, with euro-dollar, for example, I'm going to take an FX route on this, really hooked to what's going on in France, and we're not going to know, of course, until the weekend. On Friday, is euro-dollar then more susceptible to the U.S. payrolls report than anything else we've seen this week? I feel like that's going to be the question.
That's a really interesting question on kind of which side of that pair do we see the kind of the dominant force coming through. You get a big payroll report, you get a weak payroll report. There's concerns about what's happening in the labour market. That could have an effect. But do you want to hold the euro going into weekend when you don't know what is happening here? That feels like it's going to be potentially dollar positive.
It could be also a very juicy bet depending on how the French are end up in terms of their politics. I'd be curious to see how much of the hedging around the FX space happens on that Friday morning.
Yes, and I think also Tuesday, our guest was telling us, Tuesday evening is when we get the details of those three-way runoffs. Where are they reduced to 2? And then you maybe get a better sense of where next weekend's election goes in France. Should we close out the show with a quick look at French assets? We're still up substantially, but not as much as we were, incidentally. 2% higher on the CAC camera. Actually, utilities, the French utilities, the best performing. Banks also doing well in construction.
Okay, it's a bit of a short covering rally. Maybe it starts to fade. You get a little bit of better news. You maybe kind of close out some of those positions. That fades quite quickly. The biggest story to me this morning is out of France, and it's actually that people aren't going to the Olympics. That's the story from Air France KLM this morning, that they're seeing actually weakness in demand, which I find absolutely amazing. It's a weekend of sport as well. It's a week of sport coming up too.
Very much a week of sport. Critty's not letting the Olympics put her off. In fact, that's part of the pull of going to Paris.
I'm going. I have to.
Who are these people?
I want a
avoiding
t-shirt.
Paris because of the Olympics. I can reliably inform them that the Olympics is a great event. That is it for the opening trade. The first of the opening trade. The Pulse is up next. They'll continue to take you through these markets. This is Bloomberg.
and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Marine Le Pen's party dominates the first round of France's legislative election, but President Macron and his left-wing rivals move to keep the national rally from power. European stocks in the Euro rally after the French vote on bets at the far right will struggle to win an outright majority. Plus, Bloomberg also understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes, leaving the plane maker to choose between pleading guilty or going to trial. So let's also take a look at the European markets map. It's Monday and there's a lot going on. This is the picture across the board. You can see the CAC 40 actually getting a nice little lift on speculation that the far-right party of Marine Le Pen will struggle to win this outright majority in French elections. This is what we're seeing cross-asset, euro, dollar also getting a lift on the back of that French election. I guess markets were preparing for the worst, now expecting things to be a little bit more fiscally prudent. And you can see that's also giving a nice bounce compared to German bonds for the 10-year and 2-year French bonds. Let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So Marine Le Pen's national rally scored victory in the first round of France's legislative election with a smaller margin than some polls had indicated. While President Emmanuel Macron and the leftist New Popular Front maneuver to keep the far right from power, Le Pen will now chase a majority in the second round vote.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power. We warmly thank the voters and welcome this result. This first step towards choosing an alternative is a mark of confidence which honors and obliges us.
En toutes circonstances.
Our instructions are simple, direct, and clear. Not one more vote, not one more seat for the national rally.
Well, let's get more now from Bloomberg's Paris Bureau Chief, Alan Katz. Alan, good morning. It's been quite a weekend. Markets reacting positively. Is this because Le Pen is unlikely to win a majority?
Well, it's partly that, Francine. The other part might be that they're a little bit relieved that the left didn't do better than it did. There was a little bit of concern before the election that the France's left, and there was sort of a group of sort of moderate left to far left parties could have done better than expected, and that might have sort of thrown up into the air how France was going to reduce its deficit and what kind of spending patterns it might have in the future. And that was pushed aside by yesterday's result. The other issue is that, in fact, a good base case is that it will be a hung parliament, that the national rally won't be able to get a majority. And so at the end of the day, sort of things will continue as is. And for markets and business, that's pretty positive because France has been a pretty business-friendly place under Macron.
So, Alan, what exactly are the polls saying about Sunday's vote? And we're seeing now tactical voting, right? Certain, basically, parties saying, if I'm third in this constituency, then you should vote for someone else.
Yeah, so there's most of the parties, but not all, that are not aligned with the National Rally have said, like, yes, if my candidate is, say, in third place in a runoff, so runoffs can be with either 2 people or 3 people. It's a relatively complicated system in France, and occasionally even 4 people. Anyway, saying if my candidate is in a lower position, they will withdraw. They won't actually file the paperwork by Tuesday evening to be in the next round in order to give the best chance for an opposition candidate to the National Rally to win. But not everybody's doing that exactly the same way. You showed the clip of Mélenchon saying that everyone should vote against the National Rally. If you look at Macron, his group, as he and his group have said that as long as these parties share their democratic and Republican values, they would want to sort of form an alliance with them. But in the run-up to this, they've always demonized France Unbowed, which is sort of the left edge of that leftist alliance. And so it's not clear that they will cooperate if the candidate, say, who's in the number 2 position, is from that France Unbowed party. So there's still a lot of negotiation and a lot of sort of jockeying to go on between now and 6 p.m. tomorrow evening in Paris time to see sort of who ends up actually pulling out to try to support this sort of Republican front.
Alan, thanks so much. Alan Kanzler, our Paris Bureau Chief. It's going to be a busy week for Alan and his team. Now let's get straight to George Lagarias, Chief Economist at Mazars Wealth Management, and Bloomberg's Justina Lisa. Thank you both for joining us. I like inaugurating the new desk with both of you. Justina, there's a lot of news. And actually, I wonder whether markets overreacted to a possible Le Pen party win and now are overreacting the other way. The CAC 40 is getting 2%.
Yeah, I think that's a bit hard to tell. I mean, anyhow, obviously, markets have moved quite a long way since kind of like prior to this shock decision to call an election. And I think this kind of reflects the fact that anyhow, markets are not going to get the status quo and they're not going to get the best outcome, right? Because whether it is the far right or kind of left-wing parties coming to power, I think the attention is kind of on kind of what's going to happen to fiscal policy and the implications of that for kind of the unity of the Eurozone.
And George, this is kind of what you argue as well, is that it's not really, so much of a shock of who could come next, is the fact that actually France is a high debt economy with weak economic performance, and at some point something will have to give.
Well, France's debt to GDP is at 110%, expected to be 115 by the end of the decade. And for me, the news was a couple of weeks ago when Marine Le Pen was forced towards more mainstream positions after the initial bad market reaction. So the question is not who gets elected, but will they go into the mainstream to avoid bad market reactions, or will they stick to their ideology?
But the problem is that we don't really know because we don't know who would be finance minister.
That is true, but at the end of the day, most governments, look at what happened in Italy. Most governments are afraid of bad market reactions because that might cost them power. I'm from Greece. I saw this play out once and very intensely. And at some point, the government was forced into more mainstream positions because they risked outright bankruptcy. So, with that high debt, markets get a say in how a country is run.
Justina, when you look at some of the market reactions, so there's, one way of playing it is euro, the other one is through bonds. Where else are you expecting this kind of to go through as we get through a number of elections?
Yeah, it's kind of interesting because I guess like in the 2 other big elections this year, I mean, the UK is coming up, the US is coming up. I think the market reaction is a lot less obvious. And obviously in the case of the UK, I mean, everyone is already kind of expecting a Labour victory, and they have kind of like dialed back a lot of kind of their I mean, this is a pretty kind of centrist platform, so I think it is a bit less clear. And with the U.S., I mean, same thing. I very much remember in the last election, and markets ended up reacting in a completely opposite direction to what everyone predicted after Trump won. And so I think with the U.S., the question here is, are we going to see a bit more hedging, given how cheap option prices have been kind of going into the summer?
Yeah, it's a funny old market, actually, this week, because there's so much politics news, and we have, Joe Biden and his allies trying to rally after that disastrous debate. So there's so much politics in the markets. There is a little bit of data later on in the week, but I guess they're having to make a decision on fiscal policy and the like.
Yeah, I think in the case of the U.S., there won't really be much of a reaction to a lot of the election news. But you're right in that we have jobs data coming up. And that's going to be really key in the sense that we actually have seen U.S. inflation data, especially PCE coming last week, coming down kind of just as the Fed wanted. So is the jobs data also going to be aligned with that trend? I think that's going to be the big question here.
So, George, in terms of data, we had, it's incredible if you look at the 25 biggest central banks in the world. I think all of them, apart from one, will probably ease in the next 18 months. What does that mean for, as chief economist, what are you looking at?
Well, they will ease, but it's a question whether they'll go into a rate cut cycle.
Yeah.
Okay, and the problem is that inflation is actually still persistent. You did see some good PCE data, core PCE data on Friday, but if you look at the services inflation, it's still persistent. Meanwhile, inflation out of China is actually picking up. If you look at the PMI numbers this morning, you see the fastest rising inflation, input inflation in manufacturing the last 2 years. So right now, we enjoyed a good spot of disinflation because goods prices were falling. Okay, but that is coming to an end. So central banks know that. Yes, they might start easing rates, but whether they will go into rate cut cycles, this is the real question, and it's yet to be answered.
So are you expecting actually Fed cuts this year?
I do expect one rate cut this year. I'd be positively surprised if there are two, to be honest, but obviously no more than that.
And so do you think there's, as a chief economist, again, is there a bias against, because we've seen this in the past, right? The BOE starts cutting and then it's cutting almost at every meeting. And the governor actually was pushing back against that last time he came on Bloomberg. But do you see a bias towards, thinking that that's what the Bank of England will do, that they'll continue cutting at every meeting, or is it more problematic for ECB?
The ECB and Bank of England, they'd love nothing more than to cut rates right now, okay? The economy is not doing that well, and that would help stimulate the economy, but they have a Fed problem. If they start cutting very aggressively before the Fed, A, they risk importing inflation wherever they import US dollar goods, and second and more important, they risk capital flight. Look at what happened to China. China has seen massive capital flight, when the interest rate differential grew too much. So they know that they might lose money from their banks, and that is why whatever they need, they might not get until the Fed moves.
Again, this was one of the big concerns, is that, can you go before the Fed? But we've heard a lot of central bankers push back against that and saying, at the end of the day, they're setting monetary policy for their own economy.
Yeah, that's what they say, but I think the currency consideration is definitely real here. And I think it's funny because I think the first rate cut was the easiest decision for the ECB. But kind of more recently, we've seen maybe inflation, even in the Eurozone, is not sort of as benign as a lot of people thought. And in this sense, this week's number, we're also going to get a set of CPI numbers out of the Eurozone, and they will be key. And in terms of what economists are expecting, they are expecting these sets of numbers to show disinflation, but we'll have to see if that really kind of comes to pass.
Thank you both for joining us. George Lagarius, our chief economist at Mazars Wealth Management, and Bloomberg's Justina Lee. Now, coming up, we look ahead to the second round of France's legislative election as Le Pen chases a majority, with other parties plotting to keep her from power. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg.
Well, French President Emmanuel Macron's centrist alliance and the left-wing New Popular Front are weighing whether to pull candidates from the second round of the legislative election on Sunday. Now, the two groupings are aiming to keep the ascendant far-right National Rally out of power. Now, let's get more from Bloomberg's Caroline Conan at the National Assembly in Paris. Over to you, Caroline.
That's going to be a very interesting second round, Francine, and I'm very happy to get more on this with Rim Momtaz. She is research fellow at IISS. Thank you so much for being with us this morning.
Thank you for having me.
Were you surprised by the first round result? What does that mean for the second round?
What was interesting about the first round result is the very high turnout, historic turnout, and also the fact that around 10 million French people ended up voting in favor of the far right and its allies. That is a turning point, an earthquake in French politics.
There's a lot of three-way contests, what we call the so-called triangles. Do you think that could actually change the outcome that we're going to see next Sunday?
A lot is going to depend on what Macron and his allies decide to do, whether they continue what seems to be now their tactic, which is to try to peel off from the far left, LFI, the socialists, the communists, the Greens, in order to form together a central big group. If that happens, it may help the far right, and it may not. They seem to make the calculus that it will prevent the far right from getting an absolute majority, but that seems to be quite a risky bet right now.
Is that also a risk for Emmanuel Macron's legacy after 7 years of being president of France?
So there's no doubt that given this historic result for the far right, after 7 years of Emmanuel Macron running the country, after 7 years of him promising in 2017 to eradicate all the reasons, I'm quoting him, all the reasons that the French may have to vote for the far right, he may end up like a U.S. President, Barack Obama, having been in power for 8 years, and then his legacy, part of his legacy being Donald Trump in power. Let's see what happens. Emmanuel Macron still has 3 years to go in his term, and the next year could be very tumultuous when it comes to politics and the parliament in France.
That's the Obama scenario. There's also another scenario that we've been talking about on Bloomberg TV, which would be Marine Le Pen actually forging close ties with Giorgia Meloni in Italy. Do you believe in that, or is Le Pen's party very different from Giorgia Meloni?
So Marine Le Pen and Giorgia Meloni do agree on a couple of things related to migration, for example, but where they have a real difference of opinion, and historic really difference in politics, is that Giorgia Meloni's party is part of the Italian far right that has historically been pro-NATO, pro-US, close to that position, whereas Marine Le Pen's party has historically been anti-NATO and anti-US, and on that, it may become a friction point when it comes to support for Ukraine moving forward.
Oh, so does that mean that the Ukrainian President Zelensky here is the one who's got the biggest thing to lose? Is he going to be the biggest loser in here?
Well, Ukraine certainly has a lot to worry about because unlike previous situations where the president in France and the prime minister weren't from the same government, cohabitation as we call it here, this time around Marine Le Pen has made it very clear that she and her government, if the far right does succeed in forming a government, they intend on defying Macron on foreign and defense policy, which in previous situations had been the remit of the president. And if that is the case, then they will certainly try to curtail French support for Ukraine. They've already said that they support Ukraine's fight for independence and sovereignty, but they will not be providing Scalp missiles, which are the long-range missiles that have been very strategic. They will not be providing fighter jets like the Mirage. They will not be sending in-country trainers. They won't support the renewal of EU sanctions against Russia. So there's a lot that could change if they do succeed in forming a government.
There's also obviously another scenario, which could also be an Italian example, the Mario Draghi technocratic government. Do you believe that there is a way for Emmanuel Macron to actually do that and just form some kind of moderate right, moderate left with technocratic figures and be able to implement some policies for the next 3 years?
So that's certainly a possibility, but that would be a very big admission of the complete failure of his move in calling the snap elections. He said himself, Emmanuel Macron, that he called the snap election because there was a vote that wasn't represented, because the country was blocked. He couldn't govern even though he had a relative majority. If he ends up forming a technocratic government, it means that no new budget can be agreed, that nothing new can be done with the EU budget, that they can't come up and support common EU lending and funding for European defense. That will basically mean that Emmanuel Macron's foreign and European agenda will be DOA, and that will mean that he will be a lame duck president. So I think that he will try to avoid getting in that situation, and perhaps he will try to trap the far right, or so he thinks he will be doing, by letting them form a government and then leading the country into a political deadlock and a political crisis that might end with no confidence motion and perhaps new elections within 6 months.
So you think that if we get a national rally government, they will fail to get a budget in the fall, and then we'll have possibly new elections?
So that's a big question. We will see if they're able. It depends on the kind of majority that they end up getting. If they have the absolute majority, they will pass their own budget, and that budget will have real repercussions for EU budget, for EU Commission, and of course for the support to Ukraine.
Huge impact, of course, on the EU and the budget. Francine, with this, I give it back to you.
Thank you, Caroline. Caroline Conan there, and Rim Momtaz, International Institute for Strategic Studies Research Fellow. Much more to come, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Now, UK opposition leader Keir Starmer has told Bloomberg that Labour's focus on growth means the party is not planning to raise taxes on banks. His party is projected to convincingly win this week's general election.
Nothing in our manifesto requires tax rises, over and above the ones we've already set out in relation to non-DOMs, the private schools, VAT, private equity loopholes, and the extension of the tax in relation to oil and gas. So nothing else requires tax rises.
That's the Labour leader, Keir Starmer. Now, the Institute for Fiscal Studies says both his party and the ruling Conservatives have ducked hard choices on how to pay for their spending promises without raising taxes. In South Africa, the president, Cyril Ramaphosa, has announced his new cabinet allocating ministerial posts to opposition politicians while also retaining some close allies. Well, Enoch Gondongwana stays on as finance minister, signaling continuity in South Africa's economic policies. Now, the announcement came a month after the ANC lost its parliamentary majority and was forced to invite its rivals to join a coalition government. Now, in corporate news, BlackRock is buying private capital database provider Preqin for about $3.2 billion in cash. Now, BlackRock says it expects to close the deal before year-end. Preqin founder Mark O'Hare will join BlackRock as a vice chair after the deal closes. Now, Preqin competes with Bloomberg LP, the parent company of Bloomberg News. Coming up, President Joe Biden's campaign dismissed calls to quit following that disastrous debate performance last week. We'll take a look at the latest from the U.S. election with Ruchir Sharma, founder of Breakout Capital. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. These are your top stories. Marine Le Pen's party dominates the first round of France's legislative election, but President Macron and his left-wing rivals move to keep the national rally from power. European stocks and the euro rally after the French vote on bets the far right will struggle to win an outright majority. Plus, Bloomberg also understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes, leaving the plane maker to choose between pleading guilty or going to trial. So key Democrats are rallying behind President Joe Biden's re-election bid despite his disastrous performance in the debate last week against Donald Trump. It's also a major week for European elections with voting in both the UK and France. Well, my next guest is keeping a close eye on politics and government spending on both sides of the Atlantic and how it's connected to Europe's faltering economic growth in the US in comparison to the US. Well, Ruchir Sharma is Chief Investment Officer and founder of Breakout Capital Partners, also author of What Went Wrong with Capitalism, I believe, out last month. So, Ruchir, thank you so much for joining us. Congratulations on the book. This is timely because I guess there's a misconception on what capitalism is and what it's actually become. You argue that instead of retreating, like many people think, government has been embedded more in policies, but in a different way.
Exactly. So the main point, like in the book, it's sort of a revisionist history, which is that I look at capitalism right from its origins to where we have come today and trace particularly the last 100 years. And this myth that the government has been in retreat and the neoliberal forces have been allowed to run rampage. I show in the book that at least when it comes to yes, we've had globalization, we have had declining in the power of unions in some places such as the United States, but generally the government has been on this march. And it's not just about government spending as a share of GDP. It's the suite of government habits, the bailout culture, the regulatory culture, the micromanagement of the business cycle. I think what you see here is an extensive involvement of the government, and it sort of solves for me what is the biggest paradox of our times, which is that despite these incredible technologies sprouting everywhere, and now with AI, why is productivity growth across the Western world been declining over the last 30 to 40 years? And what I argue in the book is that that paradox can be solved if you look at the role of government, that because the government has become bigger and more intrusive in people's lives, productivity growth as a result has suffered, and that is the key to economic growth.
Ruchir, I mean, if you look at governments in France, it's more intrusive than government in the UK, right? And so if you look at the economic template also, the US seems to be doing so much better growth-wise.
Yes.
Is that because of less government intervention?
Exactly. So like, in fact, that's the op-ed in this morning's Financial Times that I've written, which is the fact that capitalism is in worse shape in Europe. So, the fact is that across the Western world, including like the United States, the government's role is expanded. But in Europe, it has expanded much more. One of the really surprising nuggets here, which I sort of discovered while researching this book, was that the role of government in Europe, in fact, used to be less than the United States until the 1980s. If you look at government spending as a share of GDP, in core European countries, it used to be less. After that, the role of government in Europe in particular has exploded. It's gone up everywhere, but in Europe, it's gone up the most.
So are you basically saying that, government has to intervene less and we'll have more growth? Because it's very difficult. You had the idea of writing this book also in the pandemic where we saw unprecedented spending.
Yes.
But it was also to try and keep citizens safe.
Yes.
So how do you match up the two?
Right, but the whole issue is this, that like, I'm not saying that we return to the 19th century laissez-faire capitalism where there was no welfare state or anything. There is a role for the government. The government needs to facilitate many things. But I'm arguing that the state has become overburdened today. And this is not just about government spending. It's about the culture of bailouts, that should governments be bailing out private sector companies. Like, as I argue in the book, that in countries like the United States, until the 1980s, it was considered heretical for the government to be intervening to bail out any private sector company. And now it's become commonplace, as we saw with the Silicon Valley Bank crisis last year, that now the bailouts have become preventive. So as I say in the book, that capitalism without bankruptcy is like Christianity without hell.
But Ruchir, is that because they're worried about, again, the common voter, right? Or is it because they're worried about the rich voter? And does that make a difference to your thinking?
No, I think that what we have to realize, and this is what like a document in the book, is that these interventions are predominantly helping the rich and the entrenched. Because when you have more regulation, when you have more interventions, you are keeping alive a lot of deadwood in the economy. And by keeping alive that deadwood, and also by having a lot of easy money policies, you're helping boost the wealth of the billionaires. Like, the biggest increase that billionaire wealth took place in history was in that period after the pandemic. You had massive stimulus, and the biggest beneficiaries were the rich. So sure, risk has been socialized everywhere, and so you have a lot of people benefiting, but the rich in particular are benefiting. And now you can say that you're doing this to keeping people's welfare in mind, but if that was succeeding, why are so many people today so disgruntled?
I just wonder, I was going to ask you, if we link it back to the election, so you have UK elections on Thursday, you have the second round, of course, on Sunday, then in France. I mean, do politicians feel like they can't actually be that capitalist, even if they're on the right, because otherwise they get penalized? And is that because of the rise in populism and the idea that actually you need to take care of everyone?
I'm not sure in terms of that's the right reading of it, because what are people saying? The people are generally being anti-establishment. They're not saying that we are against, like some policies which are right or left so much. It's just an anti-establishment feeling. So I link that in the book. I argue in the book that if you look at the Western world today, most governments are losing elections, no matter from which political stripe they are. 10, 20, 30 years ago.
And this is why? Because people are fed up.
Yeah, like people feel that the system is not working for them, that the system is rigged against them. When they see bailouts, when they see the wealth explosion take place at the top, when they see property prices surge due to very easy money policies, that generally leads to a disaffection that the system is not working for us. In countries like US and UK, economic and social mobility today is at record lows, right? So people feel that there is not an equality of opportunity, which is what capitalism should be about. So if I go back to the fundamental tenets of capitalism, what is it? It should be pro-competition, it should be pro-churn. And I think that what we're seeing instead is that capitalism today has become pro-big business, and capitalism has become pro-the entrenched.
It's hard to argue that a lot of the money spent in the pandemic didn't go to also small businesses. And that actually, if that money was not spent, like, have you looked at the counterfactual? If governments did not support any businesses, like, would we have had a washout, and now would we be left with like a massive depression?
No. So in terms of the pandemic, I had two sort of points to make. One, that maybe the governments were emboldened to have these big lockdowns because they thought they could just spend their way out of it. Had they not had that thinking, maybe they would have been a bit more cautious about the kind of lockdowns that they had. That's point one. The second point is the indiscriminate nature of the spending then. Of course, we needed some spending to paper over it, but the big beneficiaries, again, ended up being home. And here's the worst part, which is that long after the pandemic was over, the same easy money policies, and including some of the programs which were tailored for the pandemic, continued. Like in the United States, for example, I show in the book that in last year, government spending accounted for 1 percentage point of GDP growth. This is long after the pandemic is over. But that's the consequence of this, that once you put a program out there, once you start spending, it's very hard to put the genie back in the bottle.
Whose fault is this? Politicians thinking that they're omnipotent, central banks thinking the same, or is it really structurally
kind of like the system? But as I say in the book again, that the road to hell is paved with good intentions, which is that the government's trying to be overprotective here, but instead it's backfiring because it is corroding the core nature of capitalism. And the worst part is this, that a lot of the elite economists, I think, are backing this without understanding what the consequences of these actions are. So what the book tries to do, as I said, is a revisionist history, that we look at the last 100 years, that what exactly works, what doesn't work, and there are hopeful signs too. I show in the book where capitalism is still working. And as you point out, that look at the difference between even US and Europe, that even though US itself has seen capitalism be distorted, in Europe it's happened a lot worse.
Yeah, sure. I guess, I mean, who's a great capitalist left? If you look even at the US, I mean, no one's talking about the debt. No one's talking about really even here in the UK, no one's really talking about fiscal. You know, it seems that the parties are kind of, in a lot of places, merging closer than they were in the past.
Yes, but I think that, what I show in the book is that this strategy is not working, which is that if it was working, then these governments and these leaders should be getting elected or re-elected, but they're not getting re-elected. I have a whole chapter in the book on where capitalism is still working. And my surprising candidate, I think, at the top is Switzerland, for example. I show that it is among the world's 20 largest economies, that here you have light touch regulation, government spending as a share of GDP is not that high, and yet most people are happy. It ranks among the happiest in the world on economic freedom and happiness.
I mean, they had that little thing with Credit Suisse, but we'll get you back to talk about that another time. Ruchir Sharma, Chief Investment Officer at Breakout Capital Partners, with a thinking book, a great book that is controversial or not, depending on how you read it, what went wrong with capitalism. Coming up, heading for a smooth landing, but pressures remain. We discuss with Augustin Karstens, the General Manager of the Bank for International Settlements. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bid has always been our offer, our proposal to Sabadell, first to merge and then the offer to the shareholders has always been extremely friendly. You may call it unsolicited. Yes, it's an unsolicited bid, but there is no hostility in making this approach. We are extending the offer to the shareholders, to the real owners of the shares. And in that respect, we believe that given the attractiveness of the offer, it's a good thing for the Sabadell shareholders to have this option to choose to tender their shares.
BBVA Chairman Carlos Torres there speaking to Criti about the firm's €10 billion hostile bid for Banco Sabadell. Now, central banks have done their jobs in the fight against inflation, and the global economy appears to be heading for a smooth landing. But pressures remain for policymakers and governments across the world. Well, that's the view of the Bank for International Settlements, which has just published its annual economic report. It warns that countries whose bloated fiscal positions are further stretched by higher interest rates should focus on stabilizing public finances. Well, let's discuss all of this with the BIS General Manager. He's Agustin Carstens, who's also former governor of the Bank of Mexico. Thank you so much, Mr. Carstens, as always, for joining us. You've very clearly warned indebted countries are now, I guess, vulnerable to a precipitous loss of confidence, although this risk at the moment is largely being put to one side. Do you think governments will now heed your warning and actually prioritize fiscal repair?
Well, I hope that is the case. Again, I mean, I think that this is not the result of recent events, but this has been building up for quite some time, even some decades. Debt over GDP is at all-time high in the post-war era. Also, we are now in circumstances where a few years ago there was some form of relief because governments could say that interest rates was greater than the growth rate, and that helped not to go into an ever-increasing debt over GDP ratio. But it's very likely that interest rates will be higher than growth rates in the future. So that brings not a very positive dynamics. And on top of that, there are many other expenditures that might not be able to be postponed or eliminated, like the ones resulting from the demographic pressures, military spending, or, for example, health-related issues. And therefore, governments need to have buffers to react to these cases. Therefore, some form of consolidation, reprioritization would be good. And of course, that also would reduce inflationary pressures. And I think eventually that also would lead to lower interest rates.
Are you confident, Mr. Carstens, that inflation is subsiding? This is the biggest fight that central banks are doing right now, and it's kind of been quite a volatile journey.
Well, I think it has gone very, very well. I mean, I think that in our annual economic report, we do a review of what happened during the last year. I am very positively surprised where we are today. I mean, the scenario that we are facing today was not very likely at the end of where a year ago, and I think it has been achieved in a relatively smooth way. I think that this will continue. Now, always we have to be on the guard on surprises. There might be a few, but I think that the central banks are in the good set of mind to address any surprises and tackle problems in time.
Mr. Carstens, the BIS has been studying potential dangers from the rise of shadow banking. We've also seen a huge growth, actually, in private credit in particular. Do you worry about this race to the bottom?
Well, yes, I mean, definitely we worry about it. I mean, especially in an environment where interest rates might be higher for long. I mean, one very positive aspect of the path towards disinflation has been not only that GDP has been sustained, but also that we have gotten to this stage without many tensions on the financial stability front. Last year, we had some banking issues in both sides of the Atlantic, but today we really haven't seen much problems. Now, there are some issues or features in the financial markets that probably has postponed the impact of the rise on interest rates, for example, fixed rates, longer maturities, and so on and so forth. These can change and will be changing in the near future, and that can bring some pressures. And one of the sectors where this can show up is precisely in the ones you just mentioned.
So private equity seems to also be going through a pretty tough times in terms of valuations, in terms of disposals and higher borrowing costs. Could that have implications for the wider financial system?
Well, the exposures of the banking system to private credit and so on is limited, is well identified. I think that in a way that limits the systematicity of any potential issue.
How worried are you about commercial real estate?
Enough to pay attention to it, but not enough to make me lose sleep at night.
I mean, if you look, is it really the deficits then that make you lose sleep? If we're looking at governments trying to stabilize finances, I don't know whether, I think you had a target of 1% of GDP deficit. It should be the new target instead of 1.6 last year.
Well, I mean, each country is different, no? But, I mean, one thing we have to keep in mind is that to change the fiscal stance of a country and to achieve, let's say, longer-term targets, for example, in terms of debt to GDP, it's like moving the Titanic. So I think that the sooner the government starts realizing that today's environment is not sustainable in the long term is important. For me, I think that the lack of discussion, the lack of awareness in some capitals that this is a problem is for me the main issue. We have to start acting now, because then, you know, you can reach a situation where you really are in a vulnerable situation, and then minor things can trigger a run in the markets or dysfunction in the markets, and you don't want to be in that stage. Now, it's not very easy to see where you are with respect to that trigger point. But so the sooner you take action, the lower will be the possibility that you will find yourself in a very undesirable situation.
Agustin Carstens, thank you so much, as always, for joining us. That was the General Manager of the Bank for International Settlements. Now, coming up, Bloomberg understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes. We have the details next, and this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate while this is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Now, Bloomberg understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes, leaving the plane maker to choose between pleading guilty or going to trial. We're told that the DOJ will also fine Boeing more than $240 million and order 3 years of corporate monitoring. Now, the lawyer for the crash victim's family says it's a sweetheart deal for the company. Well, let's bring in Bloomberg's editor for global aviation. He's Benny Camel. Benny, thank you for joining us. So Boeing and the DOJ actually declined to comment. How significant would a guilty plea be, and what really are the wider ramifications of this?
Well, it's really bad news for Boeing. They'd hoped that they would get less of a slap than what appears to be the case. It's not official yet, but according to people familiar and also according to lawyers representing the victim families, this is what's going down. Boeing has a couple of days until the end of the week to respond. We just saw in that clip there, Dave Calhoun, the CEO of Boeing, he was speaking at a Senate hearing earlier this month. And at the back of that room that we just saw, that we're seeing here now, there were the victim families demanding accountability. So they're getting a little bit of that now, but obviously not to the tune of what they wanted. For Boeing now, the options are, do we plead guilty, or do we take the riskier path potentially and go to trial? Pleading guilty might sort of be the easier way out, as it were. It sort of caps the problem. But you've got to remember, this is a company that has government contracts, so that might put them into a penalty box there. But then on the other hand, as I said, going to trial will leave them with a sort of a legal overhang for years to come, and that also can't be very appetizing.
Benny, the plane maker is under huge scrutiny, but it's also pushing ahead with the deals for Spirit Aero. Is that coming into play at all?
Yeah, I mean, it's a separate but somewhat connected announcement. That came out hours after yesterday's DOJ announcement. So early this morning, Boeing said that they would buy back the bulk of Spirit Aerosystem. That's a contractor that they spun off about 2 decades ago. But in the wake of this crisis that we've been writing so much about since the start of January, they decided that they had to take this business back in-house to gain greater control of it. It's inherently a sort of value-destructive deal because they're buying back something that they had wanted to split off. They have to spend quite heavily on it to turn it around. They're buying for the asset in stock and not in cash because Boeing doesn't have the cash right now to do this. Interestingly, there's a little side deal on this. Airbus is also features in this, obviously the arch rival Airbus. Spirit makes parts for Airbus as well. So that was what made the deal quite complicated because they had to sort of divvy up the different assets. Airbus will get some of them, Boeing will get the bulk. An interesting element in this that Airbus actually gets money to take these assets off Spirit. So that's good news for Airbus and bad news for Boeing.
Interesting, so interesting. Benny, thank you so much. Bloomberg's Benedict Camel. Now, a prospect of French political gridlock actually sent European markets higher today. Investors bidding up the euro and pushing the CAC 40 to the biggest gain since 2022. Up next, Bloomberg Brief with Daniel Manis.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time, I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berg. It is Bloomberg Brief. Let's set your agenda.
Le Pen triumphs in round one. The race now begins for President Macron and his left-wing rivals to slow the momentum of the far right. Defending Biden after the president declares that he's staying in the race, allies close rank against calls for him to step aside. And it's turbulence for Boeing. Yes, a deal is made for Spirit Aero Systems, but headwinds arise with the Justice Department. Good morning, Manus.
Danny, good morning. Yeah, Spirit is bid. It's up by over 5%. The S&P 500. I mean, look, politics is the alpha headline. Some kind of relief that Le Pen just didn't do as well as everybody thought she was going to do. Now it's the coalition of the willing, the very reluctant bed partners. The CAC 40 is 34. Their Spirit is at the moment up 5%. The CAC trimming some of its gains. Stock futures, it's all going to be about jobs and jolts this week. 190,000 on the jobs report. The jolts expected to come in sub 8 million. The hedge funds are cutting risk for the third straight week. That's according to Goldman Sachs on the Flow Show. And Mike Wilson says, stay big, stay quality. That's where you want to be. The risks are now skewed to the downside if there is a substantial risk to growth if Republicans win, if Trump gets into the White House. 440 is where we are on 10s. We saw the market pop by 12 basis points on Friday. Again, curve steepeners. This is a view. Morgan Stanley say curve steepeners are attractive. You've got Barclays saying buy tips on the prospect of a Trump presidency. So that narrative is solidifying, and now is the time to get out and get ahead of the curve on your tips and on your steepeners. When it comes to the euro, this is the real sense of relief. It's on the crosses: euro yen, euro Swiss, and euro sterling. But euro Swiss is where I've gone for in the first instance. This is the relief rally in the euro. It's higher than it is in the dollar. Le Pen falls short of the absolute majority round one. Is that going to be the case in round two? The horse trading for political victory now begins over the next 24 hours. Danny.
Manis, I was also just looking at NVIDIA pre-market as you were speaking. It's down this morning. If it's down again today, it'll be for the third day running. Yet this is a market that's higher. Yet it is small caps that are trading higher this morning. Jonathan Krasinski from BTIG had a great note out over the weekend basically saying that if small caps don't start to work and don't pick up the steam, they're going to start looking like the canary in the coal mine, that something has gone wrong for this economy. And if NVIDIA continues to trade lower like it is this morning, then we won't have support for this market.
Well, that's the metaphorical house of cards, which is not only at the top of the stack, but at the bottom of the stack also comes under pressure, and you have that concertina effect. Mike Wilson's note this morning says you want to focus on quality as we go into this U.S. election, but of course on your favorite subject of small caps, the risks are skewed to the downside for growth under a Republican win. So I was sort of slightly surprised with that because there is all the fiscal narrative there. But under those scenarios of reform and immigration and tariffs, and of course his message is stay away from the small caps. Are you disappointed Monday morning, small cap smacker?
I've given up hope, man. I've given up hope on these small caps, I have to say.
Hope lives eternal on this show. Let's focus in on the politics. We're always hopeful on a Monday morning. It's by Friday we're broken. The French President Emmanuel Macron and his rivals, they are now racing to stop Marine Le Pen and her momentum.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power.
Tonight, I call on every French person attached to their freedom to the remedying of France to join me and amplify the dynamic and make the national union win against those who want to divide us.
De circonstance.
Our instructions are simple, direct, and clear. Not one more vote, not one more seat for the National Rally.
Well, joining us now is Caroline Conan, who's at the National Assembly in Paris. Caroline, good to see you. A long weekend for you. In terms of the takeaways from this first round, just looking at what the Prime Minister is saying, the lesson of today is that the far right is at the gates of power. So what was the most important takeaway post those polls that we had on Friday to where we are today? Good morning.
Good morning. It's going to be quite an intense campaign for the second round next Sunday because, in fact, the National Rally is at the gates of power, as Gabriel Attal, the current Prime Minister, put it last night, 33% in this first round, even though they didn't do as well as expected. A second position, you got the New Popular Front, this union of the left, which includes the far left at 28%, and Emmanuel Macron at 21%, actually doing slightly better than expected, but he's got a lot to lose in this second round, and he could appear as a lame duck if he doesn't manage to form some kind of fragile new majority on July 7, because at the moment you have a lot of three-way contests in this second round. So potentially, if they pull out some of the candidates who came third in those three-way contests, then you could potentially block the National Rally. At the moment, the far left and the socialists have both called for those candidates who arrived third to withdraw, but it's unclear yet what the moderate Republicans and the majority, the current majority of Emmanuel Macron's candidates will do. And of course, this could potentially change the entire outcome of this second round. So there's going to be a lot of horse trading and bargaining over the next few days.
Well, yeah, to that point, Caroline, can you walk us through the mechanics of that, of what it looks like over the next few days? Because this is important for the market, of can there be some sort of centrist coalition that comes together?
That's right. At the moment, more than half of the 577 French constituencies have these three-way contests. Tomorrow at 6 p.m. French time, 5 p.m. London time, we're going to know who actually runs in this second round. So whether some candidates are pulled out, and then you have duel with the National Rally in most cases against either someone from Macron, the Republicans, and or someone from the left. So the three potential scenarios on July 7. One, absolute majority of the National Rally. Then you get Jordan Bardella as Prime Minister and a cohabitation where the National Rally has to share power with the French president. But the most likely scenario is a hung parliament. Final scenario, a technocratic government where Macron somehow manages to call some moderate forces from both sides and form a technocratic government.
Okay, Caroline, thank you very much for that. That's Caroline Conan reporting from Paris. Now, let's get back to the politics in the U.S., because here President Biden's campaign is going on the attack against a chorus of voices that have called for him to drop out of the 2024 race.
I know it'll take to keep the world safe and free for the years ahead. Folks, I give you my word as a Biden, I would not be running again if I didn't believe with all my heart and soul I can do this job. Because quite frankly, the stakes are too high.
Joining us now from Washington is Bloomberg government reporter Kate Ackley. Kate, thanks for getting up early for us. Look, the calls from the Biden campaign are clear that he is staying in. We heard from the president there and some of his top allies. But is there a disconnect between the campaign and the rest of the party?
Yeah, there are absolutely a lot of behind the scenes conversations happening right now. Reporters were asking House and Senate Democrats who were in town Friday after the debate, what did you think? What's going to happen next? And many of them were sort of running away from reporters, didn't want to talk about it, or were clearly defensive of Biden. That has continued through the weekend. We did see, though, yesterday on a TV interview, House Democrat Jamie Raskin said, he acknowledged that there are conversations happening among Democrats about what happens next, what the future holds. And they're listening and hearing from donors. The party's donors are, many of them getting skittish about the president's debate performance and what it means for the Democrats' ticket in the fall.
Well, where is the broader support? You look at some of the polls over the weekend. I mean, the CBS poll, 28% believe that Biden should still be running, and only 54% of his own party believe that. You look at the New York Times Ed Board, the game now is a reckless gamble. That's the New York Times editorial board calling for Biden to withdraw. So how do they close this gap between what Camp David and Biden group are saying and the rest of the party?
Right. You mentioned the Camp David meeting, the Biden family huddling yesterday. The news that came out of that overnight was that, that Biden's in it. He's in it to stay. You saw congressional Democrats, Democratic leaders really sticking by Biden through this. Of course, Republicans this feeds into what they've already been saying about Biden, that he's not up to the job. But Democrats sticking with Biden really is still the main headline here. But much could change this week. Lawmakers are back at home in their districts. It's a holiday week. They're going to be doing, July 4th parades, seeing their voters. So they're going to get these, sort of their own sort of informal polls, if you will, hearing from people back in their districts. That could change how they talk publicly about it.
Okay, Kate, thank you very much for that. That is Kate Ackley of Bloomberg Government in Washington, D.C. Manis.
Yep, let's get up to speed with some of the other stories that are making news on your Bloomberg Terminal this Monday morning. According to Morgan Stanley, the growing prospect of a Trump presidential victory is making the yield curve steepener trade even more attractive. It says growth will likely slow and inflation will quicken under such a scenario. Strategists say the debate has strengthened the possibility of Trump's re-election, and this will sharpen the focus of the former president's immigration and tariff policies.
And it is now 3 days until the UK election, if you don't have enough politics in your life right now. Opinion polls are still pointing to a crushing defeat for the governing Conservatives after 14 years in power. Support for Labour slipped below 40% in 2 surveys, and the Tories remain stuck at around 21%. So that puts Keir Starmer on track to enter Downing Street on July 5th with a majority bigger than Tony Blair when he won in 1997.
Yeah, and this song was Things Can Only Get Better Then. Morgan Stanley, they're scrapping the cap on bonuses for bankers in the City of London. The Wall Street Bank detailed the changes in regulatory final. The move underlines the shift among US and UK lenders toward paychecks that look more like the bonus-heavy packages of their New York counterparts. So there you go, Danny. Now you know. Back to Wall Street. It's bonus me up in London. Look, I think there's something very interesting here. It's about who do you surround yourself politically with? What voices are you listening to as a leader? If you're in Camp David and you have your officials that you trust and that you believe in, That's where the narrative revolves. I look at what Obama said over the weekend. Bad nights happen. Trust me, I know, and he is speaking from experience there. But this election has a choice between somebody who fought for ordinary folks and somebody who cares.
Well, we have to keep in mind why Biden is running this time anyway. He very clearly set out to run because he said, if Trump is running, I will run. I am the candidate to bring us something different than Trump. And he truly believes that. So why would he change now? Why would he change his opinion now and say, I'm bowing out?
It comes down to the presentation. If you look at what went online on Friday, which is where Biden was at a rally, it was a completely different person. You know, where was that person on Thursday night? Where was that person? There was no audience and there was no free will.
By the way, I walked by that rally in New York City. Couldn't get in. They wouldn't let me.
She didn't get the ticket. What else have we got? Is there anything apart from politics?
No, there's not. And we're going to dig into just that, but specifically the Europe angle. We'll talk about the Euro rally this morning with Elsa Lingos, Global Head of FX Strategy at RBC, here on Your Brief.
Could face bigger challenges elected.
Was going to keep winning World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
On this Monday, I'm Danny Berger alongside Manish Cranny here in New York. Now, the euro is stronger this morning after the first round of French elections. Marine Le Pen's party, yes, they won, but they did underperform. So what happens now? Let's get to our guest this morning. It is Elsa Lingos, Global Head of FX Strategy at RBC. So Elsa, some relief in the euro. Spreads start to come back in line, not hugely, 5 basis points or so between French and German bonds. French stocks are rallying this morning. So did Sunday's first round make any difference to you?
To me personally, not so much, but certainly for a number of people, it rules out some of the extreme tail risks. It was highly unlikely that the far left would do very well, but that was the scenario that I think investors were most worried about. It certainly wasn't on the cards given the polls, but a number of people I'd spoken to had said that would be the scenario where the market reaction would be extreme. And even the idea of the far right gaining an outright majority had some people worried. For the most part, I think people were quite sanguine, even if that were to happen. But certainly the fact that we look like we're headed to a hung parliament has many people a lot more comfortable on this Monday morning.
Elsa, good morning to you. Yeah, I mean, look, we can see the euro rallying on the crosses against the Swiss, against the yen, and outright against the dollar. But here's the thing. The political tail risk may have dissipated, but the fiscal tail risk is still very alive. So does that ultimately cap the euro?
And I think from a euro perspective, the negative impact was fairly limited to begin with, in spot terms at least, and so the positive impact is also fairly limited. Where you did see more of an impact was in the vol market, and particularly in the skew in the vol market, and there you're seeing that unwind extend on this Monday morning. But if you look at longer term, Annie, as you rightly said, there is a real fiscal issue. I mean, France is already going to be in the Commission's excessive deficit procedure. And if you look out over a 2-year horizon, it's clear that the next president is very, very unlikely to be as centrist as the current. So there is a very clear fiscal challenge up ahead, and populists offer easy answers, which markets may not like so much.
Elsa, if we could just take a step back, because what's happening in France mirrors what's happening in a lot of places in this world. That is, governments who are likely to come into power that are not the current ones in there because there's discontent, there's upsetness about real income stagnating, there are concerns about wealth inequality. You see it in elections in India, in South Africa rather, and soon here in the US too. And that means moving to parties that are maybe more protectionist, maybe more nationalistic. Are we underestimating this wholesale shift that's happening around the world?
I mean, that's a really interesting observation, because in fact we were discussing this with a German client in the days after the European elections. The fact that all the focus was on France and the snap election called by President Macron meant that the rise in the far right in Germany actually received relatively little attention. But as you say, this is a global move. A lot of people are very concerned about the cost of living, high inflation, and it's very difficult to ask for populations to accept austerity, to accept spending cuts and tax increases against that backdrop. So there's certainly a backdrop where populists are doing a lot more better. Not everywhere across the world. Some countries have already been through the populist movement and come out the other end. I think Greece is a great example of that. But there is a market factor that we're going to have to take into account more and more over the next 2 to 3 years.
Yeah, I remember chasing Yanis Varoufakis around for literally 12 hours before we did an interview, and the one thing he said to me as we raced up the stairs was, "You won't ask us whether we're going broke." I said, no, not at all. Come with me. Let's translate this into policy, because the ECB, we have the mechanisms. Danny and I have talked about this with various guests. The mechanisms were there to stop the blowout in spreads if it really got exceptional. But here we are. The left tail risk has been removed. The ECB had a hawkish cut, as you say. Does this kind of less extreme political scenario as we stand here this Monday morning in France embolden the hawkish narrative, the hawkish position, the hawkish cut from the ECB?
No, I think the ECB is an interesting case. We discussed this a lot internally, and I'm not sure they would have actually gone ahead and cut in June had they not signaled it so heavily. You know, the facts on the ground are services inflation is still sticky. We'll see what the aggregate numbers show tomorrow, but certainly the country level numbers we saw on Friday suggest that services inflation remains a concern. And it does point to an ECB that's going to be reluctant to aggressively cut rates. And certainly we see a similar thing panning out from the Fed and the Bank of England. So slightly more hawkish central banks, probably not because of the politics though, but because of the economic facts on the ground.
Okay, well, it all comes down to inflation, doesn't it, they say, in the end of the day. Elsa, thank you very much. Elsa Lignos from RBC. The first reactions to the round one in the French elections. Coming up in the show, a look at what else is making the headlines around the world. Context matters on Bloomberg.
names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Brief. I'm Manus Granny alongside Danny Berger in New York. Your front pages, guess what? Politics tops the front pages. The French election and Biden's future dominate globally. Here's a look at what else is making headlines around the world. First up, we've got Bloomberg on the Hurricane Beryl. It's set to cause massive damage across the Caribbean. Beryl foreshadows what is likely to be a very dangerous hurricane season.
Next up on the FT and a Bloomberg scoop, I might note that BlackRock is buying data provider Preqin. I use them all the time, Manus. They have a lot of private equity data for $3.2 billion in cash. So this is really BlackRock diving in to a data push, trying to oversee risk and analyze data. Again, it's because private markets are so hot, and BlackRock outright has had a push into private markets too.
Well, it's certainly a frenzy on that one. They weren't the only bidder, were they? And Wall Street Journal goes with the Boeing story. They're buying Spirit Aerosystems. Finally, I'll get the name right. Spirit Aerosystems, $4.7 billion. It is an all-stock deal. Of course, this is about preserving the balance sheet in many ways and preserving that investment grade that they have, Danny, because they are perilously close with the cash burn.
Well, this is also something Airbus has done too, that you start to buy and bring some of your suppliers in-house after an era of divesting them, because so many of the issues that these air flights are seeing, that both Boeing and Airbus are seeing, is that the supply chain is so messed up at this point, and that they need actual aircrafts, and they are not getting them because of still the post-COVID supply chain's worries. So can you smooth out some of that process if you buy them and bring them in?
Well, this comes down to quality control, the accusations in terms of the various horrific incidences that have happened over the past couple of years, which is there was a lack of control in the supply system, the supply chain. And so to that extent, this brings it back in. This should, in theory, bring back in. But of course, this is a critically important part of the supply chain for Boeing, for their 737 and the 787 Dreamliners as well.
It's also perhaps just one of the clear paths we've got from Boeing, right? They need to give us more details of how they get out of this. And I still come back to this, Manus. They don't yet know who's going to be their CEO. They're trying to give investors some more certainty and lawmakers, and we don't know who's going to be leading the company.
Not only that, they're dealing with the Department of Justice, also charges coming through there. We're going to catch up with Sid a little bit later on. In the meantime, you've got a bond market to deal with. We'll chat to Kathy Jones of Charles Schwab on the potential for a rebound in inflation expectations. What does that do to your curve?
look at the number of women that want to learn the game, young girls that are joining on the tee, really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
From our global headquarters in New York, I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
Le Pen triumphs in round one. The race now begins for President Macron and his left-wing rivals to slow the momentum of the far right. Defending Biden after the president declares he's staying in the race, allies close rank against calls for him to step down. Turbulence for Boeing. A deal is made for Spirit Aerosystems, but the headwinds arise with the Justice Department. Danny, a very good morning. Politics, does it translate to market risk? And VAR, good morning.
Well, the U.S. market isn't moving this morning, man, as we were basically unchanged. And it is the new start of the quarter. It is a new month after June that saw record high after record high for this equity market. Can that momentum begin? NVIDIA down more than 2.5% again this morning. And what happens? The same thing that we saw largely happen last week. Mike Wilson calls them lifeboats, other areas of this market that we're trying to clamber onto, to small caps that are outperforming this morning. So has something changed? Well, for this bond market, it's doing the thing that it did for most of last month, which is yields higher. By 11 basis points last month, we're up by another 1.5 this morning, 4.41% is where we stand. Meanwhile, the euro, it is gaining this morning, stronger by nearly 0.5%. This is reflected across European markets, Manis. You see spreads start to come in only slightly by about 5 basis points with French and German bonds. And you do see the French stock market rallying, though that rally has been cut in half. So yes, we are gaining this morning, Manis, but it is a caution still.
Yeah, it's going to come down to the horse trading in terms of what Macron is prepared to step back with his candidates. You know, what kind of coalition of the willing is going to be made? None of them make for good bedfellows, Danny, but in the end of the day, that moderate de-risking that you've seen in France hasn't really had a global reverberation because the spreads, as you say, Franco-German spreads have narrowed ever so slightly. The equities have had a relief. It'll come down to a lot of views on what happens here post that Biden debate against Trump. And the narrative there is it could certainly lead to multiple fronts of reassessing where you are in bonds and equities.
Right. Well, I mean, as we talked about with Elsa, I think it not having global ramifications, at least for now, is an interesting one because it's something that's happening across the world of discontent, of inflation, of stagnating real wages that has moved the world largely to more populist governments and governments that are maybe more protectionist. So things like Trump and his tariffs is something we might see around the world, and have markets truly grappled with all of that?
It's interesting. The Bears grabbed onto the French election just 2 weeks ago or 3 weeks ago when it was called, and that did cause a mini bit of a tail that wagged the global bond dog. But this morning, on the more positive news, it's having less of an upside. But let's talk about all of this with our next guest in the context of fixed income, because the markets are in a very good place, she says, right now. Inflation is falling. The Federal Reserve is likely to begin cutting interest rates in the fall, and real yields are positive. So it's all going splendidly well. It is, of course, Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. We will circle back to the politics in just a moment, but can you give us your view of the cadence of the deceleration in inflation? We're counting down to jobs and jolts this week. We had a fairly muted PCE on Friday. Kathy, do we accelerate the disinflation from here forward to the end of the year, or is it steady as she goes?
Well, I would guess it's more steady as she goes than accelerating on the downside. We don't have that much weakness in the economy, although it's softening, and consumer spending in particular is softening. But it seems more like a gradual deceleration, or really the glide path is if you get 0.2% on core PCE, you continue this kind of year-over-year slow decline. And if we get better numbers, like we've seen recently, 0.1, flat, then you actually get, very close to the 2% target in the next 6 months or so. So the path ahead seems to be lower on that year-over-year rate. I think it's more of a gradual deceleration unless we hit a real pothole in the economy, particularly if we see unemployment rise.
So, Kathy, you like bonds, but where on this curve? Because it's a front end that's had fits and starts of being scared of the Fed, and it's a long end that's been scared of the economy and potential deficits. So where do you want to position?
Yeah, so the Treasury curve's inverted. It's been inverted forever, it seems like. And so it makes it difficult to extend duration because you're giving up some yield when you move out from the short end. We like either barbelling in the Treasury market or looking beyond the Treasury market to extend duration. So when we look at the curve in, say, investment grade corporate bonds, it's flat to upward sloping. We can capture, 5.25% yields in agency mortgage-backed securities with 6 or 7 year duration. So there are ways to add some duration, hold on to that 5% yield for 5 to 10 years if you want to, without just using treasuries to do it.
Well, it's going to be a bumpy road, isn't it, politically and in terms of volatility between now and January of next year, or now in November. I mean, who knows where we go post the actual election date. But there's a lot of notes out there this morning. Morgan Stanley is probably the most prominent one on the terminal this morning. They say a sharp shift in the probabilities in favor of President Trump may now be a unique catalyst for curve steepeners to become attractive. I mean, is it too early for you to sort of embrace curve steepeners? You talk about a barbell approach. So your first take on the probability of a Trump in the White House with his tariffs, as Danny says, and immigration policies.
Yeah, I think that a shift in the narrative about what policy will be after the election is probably the biggest risk to the Treasury market. We already have high and rising fiscal deficits, so that's something to be concerned about with the long end. I don't think it's a critical factor right now. But if we were to get, really big tariffs, limits on immigration, which has helped, boost the labor market in terms of participation, if we get limits on that or a shift in that that's really of major focus, then yeah, you could see the curve steepen. I just think it's too early. And remember, presidential candidates can say a lot of things on the campaign trail, but they have to get those things through Congress. So not only are we waiting for the presidential election, but we're really focused also on what's the composition of Congress after we get past November.
It's such a great point, Kathy, because there are so many outcomes, and you could even say, even if you could bet on what the outcome is, you don't really know how this market would react because we are so torn. But the thing that seems to be the constant is the deficit, that it's going to continue to rise regardless of who the candidate is. Someone like Stephen Major, who I spoke to recently at HSBC, said, look, it's already priced in. This is a known quantity, so there's no reason for bonds to sell off because of that in duration. Does it change anything for you when it comes to duration, Kathy? Does it put a cap on things, or is there still demand in this era of inflation coming down that outstrips any concerns about the deficit?
Yeah, we're not putting the deficit per se high on the list of concerns for the Treasury market because, there's not there's no correlation between treasury yields and deficits over time. And that, I know it's counterintuitive, but the numbers tell us that there's been no correlation for decades. But secondly, there is this range of outcomes so that you can't really predict, what the deficit's going to be versus relative growth, et cetera. And we don't end up with a sort of conclusive numerical, even semi-precise estimate of what it means in terms of basis points. So it's really better to look at the things that really drive the Treasury market, and that is inflation, Fed policy, and economic growth. And when we look at those three things, we see a positive outcome for the Treasury market.
Kathy, we're debating political regime changes and what that means for the world, not just here in the United States of America, in France, as we've discussed, India, South Africa, and a number of other nations. From an investment, from a bond investor point of view, you've just about clawed back your losses this year. You're almost back to par. But are you preparing for a regime, a new regime of higher inflation and higher rates over the medium term?
Not really. I mean, there's a lot of talk about this happening, this new regime, but I haven't really seen any demonstration that central banks are embracing higher inflation targets or that they're giving up their independence. Now, the big fear would be if you lose the independence of the central bank to counter inflation, but we don't see that happening. And so, whatever the politics are, redistribution of income doesn't necessarily mean it's going to be inflationary. Tariffs are inflationary, and that is certainly a concern. They're also, though, negative for economic growth. So you have those two things playing off of each other. But I don't embrace the new regime theory as being inflationary until we see some loss of the central bank independence to counter inflation pressures.
Yeah, fair enough. And I have to say, when that story came out, you also had people from Team Trump pushing back against it, too. So even that's not necessarily a sure thing that that's actually a policy Trump would want to pursue. Kathy, I'm afraid that's all we have time for. It was so great to get your thoughts on this Monday morning. Kathy Jones of Charles Schwab. Okay, coming up, Boeing agrees to buy back Spirit Aerosystems for nearly $5 billion. We have the details of the deal for you next on Bloomberg Brief.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger alongside Manish Cranny in New York. So the 20-year separation is over. Boeing has agreed to buy back Spirit Aerosystems. It's an all-stock deal that's been valued at just under $5 billion. But at the same time, the DOJ is also preparing to slap criminal fraud charges on the plane maker. Let's get over to Bloomberg's Benedict Campbell on this. Benny, I mean, this was a long time coming. We knew Boeing was pursuing this. So what difference does it make to a very beleaguered Boeing to have Spirit back in-house for them?
Hi, from Berlin. You're right. It's a beleaguered company buying a beleaguered business. So in some ways, it's an inherently value-destructive deal, and probably one that Boeing would not like to have done had they not been forced. And as we all know, what forced their hand was that early January blowout of that fuselage panel. That really put into focus all the issues that Boeing faces on the manufacturing side, and they had no choice. They had to buy this asset back, gain control of it again, put it under the roof of Boeing, give it more financial security, and that's the deal that we saw emerging this morning. So they're going to take on considerable debt as part of that. Boeing's debt is already rather elevated, and they're going to pay for it in stock rather than cash because they are very keen to protect their credit rating, which is just above the speculative grade known as junk, and they don't want to fall into that. So this is why, sort of in the last minute, the deal changed from cash to stock. One little side note on the deal is that Airbus will also take over some assets from Spirit because Spirit makes some components for Airbus. And unlike Boeing, Airbus will actually get paid to take over these assets. So they're paying a nominal price of $1. Not clear who's going to cough up that $1, but they will also get about $550 million in compensation to take over these assets.
Yeah, and as you say, it's the structure of the deal. They pay, what, $1, and they get $559 million. In terms of what they actually get out of this, just disaggregate it for us, because Boeing gets some more control over one of their main supply chains into some of their biggest aircraft. Just tell us a little bit, because Airbus guided lower on their numbers recently. They have issues with parts right the way across the supply chain. So what does this deal do for them?
You're right that the supply chain has been in focus for a while, and Spirit as a key supplier is obviously part of that story. And Spirit, like many other suppliers, has struggled. They don't have the manpower, they don't have the financial sort of wherewithal, the depth that the big main companies have. And that's why you've seen across the board a lot of these issues. You mentioned Airbus last week. They had a pretty sort of epic profit warning. They downgraded a whole sort of slew of metrics. And again, they said it's not the demand side. It is really the supply side that's hurting us here. So this is one step that Boeing is taking to sort of gain greater control of their supply side. But make no mistake, Spirit is a company that's not running smoothly. So Boeing will have to spend a lot of resources, a lot of manpower, a lot of time turning that asset around at a time when Boeing itself is not exactly running smoothly. So that'll be very interesting to watch. The deal will close next year, but it'll probably take much longer to integrate the thing.
So maybe it's one step forward with that, Benny, but is it another step backwards now that we have the Department of Justice telling Boeing that they are going to be charging them? It was an unknown, but we know they are going to be charging them. And now Boeing, according to people familiar, has until the end of the week to plead guilty or go otherwise. I mean, does this just throw Boeing into greater peril? I wonder what the calculus for policymakers was on this, because, you know, they have a stake in Boeing doing well. It is this big American champion. So why go forward with the criminal charges? And what now, Benny?
Yeah, you're absolutely right. So the DOJ was in a difficult position here. They couldn't let Boeing off because there's obviously huge public pressure and pressure from the families of the victims involved in these two crashes. Those were the 737 MAX crashes, 2018 and 19. So they couldn't just say, oh, well, nothing to see here, let's move on. That was clear. But as you say, they also can't penalize Boeing in a way that is crippling. This is a company that's been said again and again that has to survive. It's a company that is central to the US economy. It's central to the sort of industrial complex, the industrial military complex, no less. So you have to get the balance right between penalizing them enough that it hurts and that they get the message, but not too much that it sort of destroys the company. So what we have here on the table is this fraud charge. And for Boeing, the question is, how do they respond? Do they enter a plea deal, or do they let it go to trial? Neither of which is particularly appealing, because a plea deal might mean that they get locked out of some government contracts, whereas a trial will create a long overhang for whoever follows Dave Calhoun, the CEO who said he's stepping down. So a difficult couple of days. They're given until the end of the week to make up their minds. We know that on the 4th, it's a national holiday, so we might hear sooner rather than later from them, but it'll be interesting.
Yeah, well, Danny and I will be here on Friday morning to take everybody through that, the jobs report. I mean, just looking at the attorney for the victims, Paul Castle, he calls this a sweetheart plea deal. The deal will not acknowledge in any way Boeing's crime killed 346 people. That is the words of the attorney representing the victims. So this is still a very, very contentious issue. Benny, thank you very much for the context this Monday morning. Benedict Carmel there on the deal. Let's switch gears and from Boeing to BlackRock. The investment manager is set to acquire the database provider Preqin for $3.2 billion. It is the latest push for BlackRock to become a major player in the alternative asset space. Charlie Wells is with us. So this was a hard-fought-for asset, to say the least. Preqin, what do they get and why now?
Man, that's a really great question. And yes, this is the deal that was hammered out just a few hours ago in a space that is one of the hottest in the financial world right now, which is private capital. Private capital is expected to grow to $40 trillion by the end of the decade, and BlackRock wants to be in the mix there. Now, one of the challenges in that private capital space, we know, is data. The data is just not as readily available as it is for private assets. So what BlackRock gets here is access to the 190,000 funds that Preqin tracks, access to the 60,000 fund managers that Preqin tracks. I should note that Preqin is based here in London and also has a history of tracking data for private equity and hedge funds. So in a world where data is the new oil, what we are seeing with this deal just hashed out is that BlackRock has effectively bought a petroleum field.
Well, that's a fantastic metaphor, Charlie. Because also, if we think about just taking a step back, I mean, Preqin, as we're talking about, is a private markets data provider. And this is a race in the asset class itself that BlackRock has been under. So, okay, they've got the data. What else does someone like a BlackRock, who's well known in public markets for things like ETFs, for mutual funds, what does it take them to really get in this race and dominate alternative assets?
Yeah, Danny, so data is one piece of that puzzle, but it is an incredibly competitive space right now. So this is a place that not just BlackRock is trying to dominate, but Blackstone, KKR, Apollo. And one of the issues that's really interesting when you talk to executives at these fund companies is this issue of education. So even though in the financial space, this is one of the most sought after assets, when you go down the chain, when you talk to financial advisors for the wealthy, and when you talk to the wealthy themselves, they're not necessarily aware of how alternative assets work. They're not necessarily aware of how they fit into that kind of 60-40 portfolio that a lot of investors are very familiar with. And so what this does for BlackRock is it gives them data at a time when they're trying to educate the consumer, educate the financial advisor, and they can go to them with this data offering as well.
Okay, and then just very briefly, the banks. There's no major reaction from the banks this morning. I mean, they waited until the market closed on Friday to announce their payouts, their buybacks. They're upping those in size. So who's on that stack?
Yeah, so look, JP Morgan offering $30 billion in buybacks, Morgan Stanley $20 billion, and we're seeing some increase in dividends as well. So, you know, Bank of America from 24 cents to 26 cents, Goldman from $2.75 to $3. Let's see how their shares perform, but let's remember bank stocks have been doing pretty well from this time a year ago, up about 30% on that KBW bank index. Let's see what happens when the market opens.
Charlie, appreciate it. That is Bloomberg's Charlie Wells. Man, so let's get a quick check on the bond market, because you pointed this out to me. Yields are rising this morning. I mean, how much of it is that you don't need a haven bid post-French elections, or is it just the start of a new quarter and we've decided to sell bonds?
Well, you know what? I think you're probably more right that we've started a new quarter and some people decided to sell bonds. But also, I also think the timing of this is that on Friday we had the U.S. bond market up by 12 basis points. That was after the biggest monthly rally that we had in 2024, and this curve steepener narrative came into play. I just wonder how much of this is a dislocation in the time slot between the close of business in Europe on Friday when they went home and went to the Côte d'Azur, and where we are this morning. And as one very good friend said to me over the weekend, he said, "Oh, I'm dreading Friday." He said, "Every junior trader in the world's going to be on the desk on Friday. And literally said to me, "That's it."
It's such a good point, though, because we have a UK election, we have US jobs data, and everyone's going to be at the beach, except us.
Except us. We don't go to the beach. We're here for you.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Let's get you set up for your trading week. Here's what's ahead. The Supreme Court is going to be ruling today on Donald Trump's claim that he's immune from criminal charges over attempts to overturn the 2020 election. Then, speaking of elections, Thursday, it's one in the UK. Markets are closed also in the US for the 4th of July. And we close out the week with the US jobs report on Friday, where Manus and I will essentially be the only people in the office on Friday.
Counting down and counting through what happened in the UK. What is the size and the scale of the Labour victory? Some stocks to watch for you. Boeing, you need to keep an eye on that. Agreeing to buy Spirit Aerosystems, holding in an all-stock deal. Then you've got Coin. You've got Coin Van X decision to file for an ETF holding on Solana. Cryptocurrency may prove to be the long shot. So Coinbase is nicely bid. They're up over 2%.
Yeah, I can't just say it's interesting. NVIDIA down this morning again. Small caps up. It's some of that rotationary flavor we got from last week. But
She's
can it
actually
last?
the queen of small caps.
I don't know. I think I'm turning bearish.
In another life. In another life, she wants to be a small caps analyst.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zay Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Incoming data, in particular the more important data, it still shows the economy doing well.
Even with further progress, while welcome, it's still not enough to justify a top-line move in terms of monetary policy.
Interest rates have done their job. They've brought demand and output down from the peaks we saw.
I always say to people who want the Fed to start ASAP and move quickly, be careful what you wish for.
The more likely error right now is that the Fed will not start cutting early enough and then will overshoot on the way down yet again.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance coming into Q3, coming off the back of 3 consecutive quarterly gains on the S&P 500. We are hitting the ground in week 1. Absolutely running, stacked. Chairman Powell tomorrow, payrolls on Friday, and Lisa, a ton of economic data sandwiched in between.
It really kicks off today with the ISM manufacturing data. It has to do with this idea of whether we're seeing activity slow and tomorrow we get jolts. Key question here is, does this confirm the weakness that people have been coalescing around over the past few weeks? Or does this fly in the face of that and really pressure the Fed to stay on hold for a bit longer than people currently are expecting?
Big question for us, big mission for us this morning. Politics absolutely colliding with financial markets. A question that CBS YouGov asked a range of individuals. Does the president have the mental and cognitive health to serve? That's the question. This is the response. Almost 3/4 of the electorate expressed doubts. Nearly half of his own party do not think he should be the nominee.
And 28% of registered voters do not believe that he should be running for president, meaning more than 70% believe he should not be running for president. Look, this comes down to this question of, does this make it more likely that Donald Trump is going to be president? And Morgan Stanley really put this to the test over the weekend, saying that if Donald Trump were to become president, you'd expect a steepening in the yield curve. Look, most people, when they think about this, they're not thinking, what's the implication for the yield curve? At the same time, the fact that you have bond strategists starting to actively game out scenarios where Donald Trump is the more likely president tells you just how far things have shifted at this point.
I'm totally on board with you. This felt like day one to express some of those thoughts and start to suggest trades. This came from Mike Wilson of Morgan Stanley. Here's the quote. Risks are skewed to the downside for growth under Republican win scenarios due in part to immigration reform and tariffs. Now, let's be clear. These are things we've been talking about for a while, but I think they just take on some added importance after that debate Thursday evening.
If you just look at, for example, some of the prediction markets out there, they give Donald Trump about a 70% chance of winning at this very moment if he is running against Joe Biden. This raises a real existential question. How much pressure is this internally within Joe Biden's camp to really get him to step down and allow somebody else to take the place? Report after report this weekend saying that basically his insider circle saying, no, just keep on going, fight, defiance, that's the way to go. You just wonder how far that will go given the fact that you have major publications that are traditionally skewed to the liberal side saying, hey, Joe Biden, it's your time.
And this is US politics. We need to talk about French politics as well. If you pull up the board, the euro's rallying, French equities are doing nicely as well. And if you look at the comparison between the French 10-year and the German 10-year, that spread is narrowing. It's a slightly less convincing win, I think, than expected in round one of the elections for Marine Le Pen's party. Some tactical voting in the second round may blunt the right's advance, but I think there's still a ton of uncertainty here, Lisa, going into the second round.
I should say that's sort of an understatement given the fact that people are rallying around the idea that Marine Le Pen's party got something like 32% versus 34% as polled. It's not exactly as if she didn't just get something that looks more and more like a majority. Key question to me is, can you get some sort of unity between Macron's party and the far left party? Can you get unity to try to fight Marine Le Pen, or does that fall when you start to actually deal with the nitty-gritty of policy?
Quite a start to Q3. Can't believe it's July. Let's get straight to it. Your scores look like this on the equity benchmark on the S&P 500. Futures just about positive by 0.1%. Yields with a little bit of a lift here. We're up a single basis point, 440.79. Lisa, I don't know what you made of Friday's session, but double-digit move on a 10-year yield to close out the week, the quarter, and go into the weekend?
You know, I really don't know what to make of it other than perhaps people are taking a look at just how much we recalibrated some of the yield space. Honestly, heading out into this week, it really is going to be dominated about, do we get confirmation about the weakness? I think you are correct to focus on the yield space. Tomorrow we get the JOLTS data, and that's where it really begins for me, other than the ISM manufacturing today. The fact that JOLTS are going to come out, job openings, do you still get a real kind of feeling of increasing slack in the labor market? And do people get more credence to that idea rather than some of the messy data that some people, even Jay Powell, has frankly cast some doubt as? We get a litany of central bank speak. Jay Powell tomorrow at the ECB's Sintra Portugal conference. We're also going to be hearing from John Williams. We're going to get Wednesday a crush of data ahead of the long weekend that some people are going to have to put a pause on Friday to get the jobs report. But really, if we get some of the jobless claims, do we start to see that ongoing uptick that you pointed out last week? And I think we should sit on this for a hot second. You pointed out it's been creeping higher. Can you just shrug that off as normalization? It has never in history just been a single line, a blip up, a boop, there we go. It has always been something that has been a more protracted increase in jobless claims that has become something that's much more worrisome.
Without a doubt, that's going to be a theme for us this week. And if you go through the estimates for Friday on a payrolls report, 190 is the estimate for the headline payrolls read, 272 the previous number. There are people out there that suggest the unemployment rate on Friday might be more important to what the Fed's going to do here than headline payrolls, given what Chairman Powell said to us in the last press conference.
Especially because we don't have an understanding of just how many jobs need to be created every single month in order to create a market that is fully employed. We have a different labor dynamic. We have a different population of workers. And that's something that we can't emphasize enough in our lack of understanding of what an appropriate, healthy labor market looks like in the numbers.
I know I say it basically every Monday morning, the week is stacked, but truly, the week is stacked. This program is too. The next hour looks like this. Marvin Lowe of State Street as the second half gets underway. We'll catch up with him shortly. Terry Haynes of Pangea Policy as President Biden refuses to back down. And Pooja Kumra of TD following the first round of voting in France. We begin with our top story, kicking off the second half with comments from Fed Chair Jay Powell tomorrow and the US jobs report on Friday. Marvin Lowe of State Street writing this: our base case remains that the world is different this time, and sticky inflation along with tight labour markets will keep inflation higher than 2% in the intermediate term. We suspect the Fed may be done with its cutting cycle by the third quarter of 2025. Marvin's with us this morning. Marvin, good morning to you.
Good morning.
Before we talk about the cutting cycle ending, we need to talk about it beginning.
Yes.
When do you think this ultimately begins?
For sure. You know, we've been saying December for a while, so we'll just stick to that number. To me, December versus September is not really the big story. It's where we land when we're done with this that really comes into focus as we get closer to the start of the cycle.
Are people looking ahead to Friday suggesting that maybe the unemployment rate might be more important now than perhaps headline payrolls? Would you agree with that?
Yeah, I mean, you know, for sure, the whole full employment aspect of the dual mandate is challenging for the Fed. You know, the number that they try to put on it is the unemployment rate. It really is at their year-end target at this point, and with inflation going in the right direction, that's going to really create the September versus December type of discussion. So it is important, yes, for sure.
There's a question here at this point whether the Fed is currently leading increasingly dovish. There was a note from Andrew Hollenhorst of Citigroup over the weekend basically saying, look to what Fed Chair Jay Powell says, expect it to be much more dovish than the meeting minutes, which evidently we get and nobody cares about this week. How much do you agree with that? Is there this sense that the weakening in the market has sufficiently spooked Fed officials to really push them to maybe even consider an earlier rate cut?
Yeah, I mean, if you look at their commentary over the last 6 months, it really has surprised to this dovish side of things. Beginning at the end of last year, you know, kind of confirming in the early part of the first quarter when they were willing to overlook some of the hotter data. It was only when the data forced them to really, you know, come to terms with an inflation profile that wasn't moving in the direction that they wanted, that they did that. So yeah, I think that this Fed historically has wanted to lean dovish. Even though you've got important hawkish vocal voices, it goes with the chair. You know, the whole board moves with the chair in my mind.
How much has the Fed, in a way, been de-emphasized? And I say this as at a time where, as John was mentioning, politics very much front and center, and you see an increasing number of estimates saying that either candidate could potentially increase the deficit depending on the composition of Congress and could lead to a steepening in the yield curve. Is that something that you're coalescing around, that you're changing your view around, given what we're seeing currently transpire in the political sphere?
I mean, the Fed is always important. You know, don't get me wrong. The discount rate that everyone uses is, you know, the benchmark for all assets around the world. But kind of having said that, yes, we have been in the camp that we should be thinking about a bear steepening for quite some time, based on exogenous events that might not seem related, but will come together in terms of just what the clearing price for yields are. One of the more interesting things to me this morning is that while we've got, you know, let's say European assets rallying fairly aggressively, you've got yields higher, and you've got yields higher in the U.S. kind of following last week. There is a sense that politics and really this populist evolution around the world is going to affect the amount of debt that we all need to absorb.
Just go a little bit further here. Bear steepening means the longer end sells off more than whatever the front end does, so yields are going to climb. Can you just point to a specific policy that's going to lead to that outcome? What is it that's on the table that you think is going to drive that?
Well, if we're talking U.S., certainly, you know, the discussion around a Trump candidacy, you know, how he would approach immigration, which has been so important for the jobs market, as well as for growth aspects, and the amount of debt. Easily, you can get to that. Effectively, every one of the more controversial policies that the Trump administration is talking about is inflationary. So you get to that quite quickly. The amount of debt that we have is something that we've been talking about now for, you know, a while. You know, we sound like the old bond hawks at this point, but it's a concern with the amount of debt that is scheduled to be released.
Given the policy mix, you could make the argument there would be a tailwind for inflation, but a headwind to growth. And I'm just wondering from your perspective how you'd push that through fixed income. What would that look like?
Yeah, I mean, the easiest trade is a bear steepening for sure. You know, that growth aspect, if you will, would require the Fed to be more vigilant just because it's facing a restricted interest rate that's too high. But it's the long end is much harder to control. You know, Operation Twist is what they did to try to control it, but QT is still part of the process. And a $7+ trillion balance sheet gives them much less flexibility in my mind.
When do you start thinking about the signals being sent from the divergences that are going on in the equity markets and what that means for fixed income? At the same time that we've seen yields creep higher, we've seen this massive divergence with small caps declining 3.6% in the second quarter versus the overall index gain of almost 4% on the S&P. Some people saying this could potentially be a canary in the coal mine if it doesn't start to normalize soon. Do you take some signal from that that kind of edifies this idea that we're seeing from some people that weakness is really the main story here, but just a lot of people aren't noticing it yet?
I mean, it certainly creates concern when you have a market that isn't, that's really showing this degree of dispersion. You would hope that it would start to positively affect more companies for sure. Kind of having said that, liquidity in the markets, I think, is a very, very important thing. We still have, again, record-sized balance sheets. That is a lot of liquidity that is supporting these asset classes. It is stark to me that it's these kind of stronger companies that have balance sheets that give them flexibility that are ultimately outperforming. And the earnings outlook, if you will, kind of from at least a market-weighted perspective, is still supportive of those risk assets. So, those stagflationary concerns could be a potential in administrative changes, but we're not really seeing it now. And I think we have to trade the earnings and the data that's coming at us.
You strip down the muscle of big cap tech on the S&P 500, equal weight, Q2, down 3.1%. Market cap weight, S&P 500 Q2 of 3.9%. That's a massive outperformance there.
At a time when a lot of people are wondering whether we're overpricing some of the earnings of some of the top companies, this from Torsten Slok that I thought was fascinating. The top 10 companies in the S&P 500 make up 35% of the market cap, but only 23% of earnings. This is gaming out ongoing gangbusters types of growth from the likes of NVIDIA.
Marvin Lowe, it's good to see you. Thank you, sir. Marvin Lowe there of State Street. Equity futures right now positive by 0.1% on the S&P. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Israeli Prime Minister Benjamin Netanyahu is vowing once again to continue fighting Hamas until the militant group is eliminated. He spoke after an Axios report claimed that the Biden administration sent around amended language for its ceasefire proposal between Israel and Hamas. That report also goes on to say that the U.S. is working with Qatari and Egyptian mediators to change what's in the first stage of a three-part deal. And we also got China data this morning. It was mixed, and it continues to fuel worries about the country's economy. The Caixin manufacturing PMIs beat estimates, and it had the strongest reading since 2021. But a gauge of manager expectations for output fell to the lowest since 2019. Chinese bond markets responded with a rally that sent yields to a record low, and the PBOC has pushed back and hinted that it might sell some of its own holdings. The DOJ has told Boeing that it's charging the plane maker with fraud in connection with 2 fatal crashes involving its 737 MAX plane. That leaves the company to choose between pleading guilty or taking the risk of going to a trial. The company has until the end of the week to make that decision. The DOJ has also told Boeing it will need to pay a fine and hire a corporate monitor. And that's your Bloomberg Brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the president fighting back.
I know how to do this job. I know how to get things done. I know, like millions of Americans know, when you get knocked down, you get back up.
Very, very different. President Biden at that campaign event. Much more on that story just around the corner from New York City this morning. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Live from New York, welcome to the program. Equity futures here positive by 0.1% on the S&P 500. In the bond market worldwide right now, yields drifting higher. Small move in the US, up a single basis point. The 10-year here, 440.79. Under surveillance this morning, the president fighting back.
I don't walk as easy as I used to. I don't speak as smoothly as I used to. I don't debate as well as I used to. But I know what I do know. I know how to tell the truth. I know how to do this job. I know how to get things done. And I know, like millions of Americans know, when you get knocked down, you get back up.
So here's the latest. Key Democrats rallying behind President Biden's re-election bid following a disastrous debate performance. Even as the latest polling from CBS shows just 27% of voters believe Biden has the mental and cognitive health to serve as president, down from 35%, already exceptionally low in early June. Terry Haynes of Pangea Policy joins us now for more. Terry, I think you, sir, have been on the money. A lot of fake outrage over the weekend, obvious to everyone but pro-Biden media. Thursday evening seemed to be a wake-up call for those individuals. Terry, a question I'd ask to you, how much of this story is already in the price?
Well, I think probably most of it is, John. You know, there's a lot of, in politics in America these days on both sides, there's an awful lot of shame, an awful lot of lack of humility to go around. But you know, the voters were very much ahead of this as well. And thank you for the compliment to me, but this program was well ahead of this as well. But bottom line is the voters have been well ahead of this all along. And at the end of the day, what you're going to have is Biden still running, and you're still going to have a neck-and-neck race, I think. And that's where we are.
Terry, what are you learning from the polls that we got since Thursday evening going through the weekend?
Nothing so far. You know, the usual rule of thumb on this, and it was applied during the State of the Union address, which I think is the last major public television event that was widely tuned into, is that it's going to take almost 10 days to fully shake out. It doesn't surprise me a bit that a flash poll of a bunch of folks says, wow, there's some more concern here. But at the same time, I think what you're going to have is you're going to have a Biden rescue effort going on over the next 7 to 10 days to try to mitigate that. And they also think, you know, they've got 4 months to turn this around. I've said to you before, I'll say it again. It's not going to ever be a case about whether Biden makes the grade one time. He's going to have to make the grade every time between now and the election in order to put himself in the best position to win. Now he's starting off a little bit behind.
Terry, the New York Times, the Atlanta Journal-Constitution, a number of different newspapers have come out, their editorial pages saying, hey, Joe, step down. You should pave the way for somebody else. It's unusual to have this kind of groundswell of a response in media where the op-ed pages traditionally are known as skewing to the liberal side. Do you think that is significant?
I think it's significant only in the sense that many of those same outlets are actually trying to cover their tracks on a lot of this stuff. They've been enablers for the president. They've among other things, derided reporting that Wall Street Journal and others called into question Biden's mental acuity and everything else. And the other shoe to drop from the New York Times in that very same editorial is, you know, we think he should drop out, but if he stays in, we still think he's the better choice over Trump. Which tells you everything you need to know about what's actually going on there.
At the same time, a number of people are gaming out, including on Wall Street, the idea that Donald Trump now has a better chance of winning. I'm looking right now at Predicted. It gives Joe Biden about a 30% chance of winning, down from something like 46% just a couple of days ago. Do you agree that this is how much the odds have shifted against Joe Biden, given the performance of the debate, and frankly, the groundswell of outrage in his own party that he hasn't allowed someone younger and possibly more dynamic to take his place?
Absolutely not. I don't. I generally don't have much use for betting markets, but in this case, I have even less because, the president uniquely is not elected by a popular vote. The president is elected in the Electoral College. We all know this, and yet we want to go ascribe lots of significance to these things. Bottom line is today is that the Electoral College is where it was, which is an essentially even race with about 77 Electoral College votes up for grabs, the vast majority of which are skewing slightly to Trump today, but it's all still within the margin of error. So, that's a very different look for a president than a betting market, number one. Number two, who the president is all by himself doesn't matter. When you have to mix in president with Congress in order to understand what's going to happen in 2025. If you do that, what you find out, I think, is that it's about 70% likely that you've got a split government in Washington, regardless of who the president is. So, betting markets and can move all over the place if they want. But I think that's actually the situation we're looking at today.
Terry, how do you think they're going to manage his campaign? We all remember 2020. He was able to make it a referendum on Donald Trump. He could sit back, some might say, hide away from the whole campaign. COVID was absolutely ripping through many economies worldwide. That meant he could take a real step back. He can't do that this time around. How does he prevent this becoming a referendum on him?
Well, I would say it's a referendum on him regardless. He's able to really talk about it and do more than just have the minimum acuity available. But now they're going to have to ramp that up. He's going to have to be out there a lot more the way he was Friday and over the weekend. And I think what they're going to end up doing is putting him out there more. And, frankly, I think they have no choice but to do that, number one. Number two, they're still going to stick to the strategy of calling Donald Trump the lying liar. And, that's been evident in press both before and their own emails, both before and after the debate. What they think they've got there is of convicted felon plus liar beats president with some concerns. The last thing I will say about this is this. Larry Sabato of the University of Virginia did some very good work last week before the debate and showed that people that are slightly for, slightly less. Slightly for Biden's presidency, Biden is plus 28 over Trump. People who are slightly against what Biden's been doing in his presidency were up by Biden over Trump by 77. And that's not a typo. The question is not in the electorate, is it Biden or Trump, which in any other race it would be Biden versus the Republican. The Republican would be getting some benefits here. What this is Biden with an advantage among unsure voters, and those voters right now having nowhere else to go. So it's, I think, a very different race than most people are seeing.
Terry, just quickly, when you say the answer is to put him out there more, what do you mean by that? Scripted rallies? Teleprompter? Are we talking about news conferences, actual sit-down interviews, much more frequency, seeing that a lot more?
Oh yeah, I think it's you're going to see the White House do what they've done before occasionally. You're going to see them put him into quote unquote candid environments, but they will try to, as they always do, to control that environment absolutely as much as possible. And they've. As we talked about a little bit earlier, they've still got some willing people to help on that.
You just wonder if there is a second debate. Terry Haynes of Pangea Policy. Terry, thank you, sir. Just to pick up on what Terry said at the start of this exchange, the general public had already seen what we'd already been talking about on this program for the last 6 months, that the president wasn't in a great state. You can see it in the polls. This was June. Does the president have the mental and cognitive health to serve as president? 35% said he did. The update is 27.
The issue to me is what went wrong where all of these people were in denial and didn't address this when there still was time left on the clock? And is it just too late? And ultimately, is that what we're seeing right now in the reluctance to move on?
Global politics in focus this morning. Up next on the program, Marine Le Pen's national rally dominating the opening round of voting in French elections. That conversation is up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Hello Q3 and welcome to July. Your equity market looks like this on the first trading day. Equity futures positive by 0.1% on the Nasdaq, totally unchanged on the Russell, positive a third. On the quarter though, and I think we need to talk about this a little bit more, the market cap weight, S&P 500 advancing almost 4%. The equal weight for Q2 down by more than 3%. Lisa, that's the story of the last quarter.
There raises it's an uncomfortable question, which is essentially if you don't see some sort of broadening out in this rally that everybody has been expecting, and it's been like waiting for Godot, it never actually happens. If you don't get it, is there a broader weakening type of signal that makes the rally that we're seeing unsustainable? That is the fear that you see embedded in a lot of the potential calls that we hear from Wall Street.
Just starting to see those cracks in the economic data, just slowly, particularly in the labour market. We'll see how this starts to affect markets more broadly. In the bond market, yields worldwide this morning shifting higher. We saw this Friday, double-digit basis point move on a 10-year yield to close out Q2 going into the weekend. Your 10-year resets this week at 441.18.
So you asked me earlier, what did you make of it? And if I were really honest, I would say there might be some kind of political overtone to it.
+1.
Exactly. There seems to be this issue that essentially, if you get the chance of a Donald Trump presidency, that could potentially be more inflationary in certain aspects and cause the Fed to have to counter that in some capacity. You can argue that's not true. I've seen arguments on both sides. Regardless, that is what's coming out in a lot of the Wall Street notes. And you have to wonder whether that did infect the bond market just a little bit on Friday at a time where otherwise you're not necessarily seeing the data to really support that.
I'm going to say it. Friday was the first trading day of this election campaign.
There you go.
It was day one.
Bold.
And I think it's backed up by what we're hearing from the South Side over the weekend, trade after trade. It's not scenario analysis anymore. It's actually people saying, you know what, the risks have gone up. This is what it looks like now.
And that was Matt Hornbach's point from Morgan Stanley, basically saying that if Donald Trump wins, and now there seems to be a greater chance in their eyes, you start to see that yield steepening, which essentially goes to this point that either candidate isn't going to counter the deficit. The question and the unknown is, what happens when you overlay tariffs and curb immigration to a great degree? How much does that shift the economic picture in ways that currently is not in the trajectory?
That's the politics of America. On the other side of the Atlantic, we need to talk about the other side of the trade. On euro-dollar, we need to talk about a single currency. The euro's firmer here by about 0.4% at 107.54. So the polls were saying one thing, and ultimately Marine Le Pen's party did quite well, but just not as well as the polls were suggesting. And now we face the scenario from round one to round two that you might get some tactical voting. Some of the people that are in third place drop out to try and form this sort of like unofficial coalition to prevent Marine Le Pen's party from going forward and getting a majority.
Basically, Macron's party and the left party are going to join forces to try to make sure that the Marine Le Pen party doesn't get some sort of majority. I take a look at this, and to me, the market question is, let's say that happens. All of a sudden, do French assets go back to where they were before? Was it as if the election never took place? Does it go back to sort of not having the same kind of risk premium baked in versus German benchmark yields? I don't know that that's the answer. I've seen a number of reports saying that basically that's what people are expecting to happen. But is that what we're doing here? We're papering over all of the political dissent and the potential populist upswing by just simply little votes that can just quiet it for a longer period of time? It's sort of what's been going on for a long time. When does that breaking point happen where suddenly this embeds something real in markets?
It's worth pointing out the spreads are narrower. France versus Germany this morning, but only because German yields are up more. It's not like French yields are down. We're up by 2 basis points at 332.
Yeah, in fairness, it's not as if Germany is just facing this complete political stasis. I mean, they are facing their own political unrest. At the same time, you have to wonder whether that gap stays wide, as some people were expecting, or whether it just goes back to what it was before, if there is some coalition between the Macron party and the left.
Much more in France in just a moment. Under surveillance this morning, President Biden's campaign fighting back in the face of rising doubts over his ability to serve. The latest CBS News poll finding 27% of voters believe he has the cognitive health to serve as president. That's down from 35% a month ago. Far more instructive to me is the 35 than the 27. I'll tell you why. If you were surprised by Thursday night, where have you been? 35% of the electorate, they're basically already saying that this is a big problem.
And the fact that it hasn't been addressed earlier is also a big problem. Why is it that there is a cadre of Democrats around Joe Biden that haven't been discussing this actively in public and acknowledging what everyone else is seeing? I'll add another twist to this that we haven't mentioned this morning. What about the adversaries of the United States that have been watching this? We heard concerns quietly by European leaders who saw Joe Biden on some of the trips saying that they were worried about him. Now you have Netanyahu. You can have very controversial figure, both within Israel and outside, and a lot of people not a fan. That said, he's raising the specter of an emboldened Iran as a result of the speech and the debate that Joe Biden put on, and this concern of who is running the country if he's not capable of really being with it after a certain hour. These are some of the questions that are percolating. It just is difficult to see how this is going to increase the stability of the world, let alone the country.
They're legitimate questions. This is a question that's not going to go away. Certainly not this morning. We'll be covering it for you over the next few weeks, months, and maybe a lot longer than that. The DOJ elsewhere telling Boeing that it's charging the plane maker with fraud in connection with 2 fatal crashes involving its 737 MAX planes. This is according to our reporting here at Bloomberg. The company has until the end of the week to decide whether to plead guilty, with the DOJ also telling Boeing it will need to pay a fine and hire a corporate monitor. Lisa, that stock is down 1.2%.
If they get this fine, it would essentially bring the penalties around some of these incidents to around $500 million. The fact that Boeing shares are only down 1.2% shows how much pain has already been baked into these shares. It's one bad news after another, and it seems like the Department of Justice can't let this go. Just from a sort of moral and legal perspective, as much as this is the national champion that they need to see financially succeed, they have to take actions at a time where a lot of people are raising questions about, frankly, the safety of their planes and just the oversight by U.S. government officials.
Are you checking the plane before you board?
I'm not, and I'll tell you why.
Go on.
I don't want to know. Because I'm not going to get off the plane. I mean, I know myself. I don't want to know. I'm like going to do the ostrich mentality.
Yeah.
Full on, just denial, stick my head in the sand, pray for the best.
I would do the same thing. Because I'm not going to change, but it would just make me anxious. But the fact that it would make me anxious is a problem for the manufacturer.
Correct.
Clearly.
Yes, that's the reason why I'm not going to change.
Okay.
No, I don't care.
George Ferguson of Bloomberg Intelligence joining us a little bit later this morning. Look out for that exchange on Boeing. Let's get to this final story. Marine Le Pen's national rally dominating the first round of voting in French legislative elections, locking up just over 33% of the vote. This according to Interior Ministry figures. The new Popular Front got 28%, while Emmanuel Macron's coalition picked up 20.8% of the vote. On the ground in Paris is Bloomberg's Caroline Conan. Caroline, this was round one. Walk us through how we're set up for round two.
The relief could actually be short-lived because it's going to be quite intense campaigning between today and the second round on Sunday, July 7. A lot will depend on alliances between the two rounds because usually a lot of the time you have duels, two candidates facing each other in the runoff. But in this case, because of the high participation that was at the highest level in 3 decades, you have in more than half of the constituencies across the country, you have three-way contests. So a lot will depend on how many candidates who came in third position actually pull out of the race and decide to block the national rally in the second round of these elections. Already the far left and the socialist moderate left wing have called for all those who came third to withdraw from the race. It's a little unclear for some of Macron's candidates whether they will pull out. We will know by 6 p.m. French time tomorrow, Tuesday, who remains. But clearly, calling for this snap election, this is a strategy that could backfire for Emmanuel Macron.
How comfortable is the alliance from the left, from the progressive parties and Emmanuel Macron's party? Do we see that as something that has a lasting effect to try to keep Marine Le Pen from attaining the power that it seems like is there in terms of the polls?
This is actually a very interesting question because a lot of people here, analysts, actually are saying that this union of the left, the new Popular Front, could actually implode and the far left could potentially be sidelined. That would be a way for President Macron to find some kind of fragile new majority with the moderates from the right, the moderate from the left. Even if it means possibly a technocratic government like we had a few years ago in Italy, for example, with Mario Draghi. Now, there is still also a slight chance of an absolute majority of the national rally. At the moment, 2 polls are actually saying that Marine Le Pen's party could indeed get an outright majority, and in that case, you get Jordan Bardella as prime minister, and you end up in what we call here a cohabitation, where you have to share power with President Macron.
Watch this space. Caroline, thank you. Caroline Conan in Paris on the ground after round one, looking ahead to round two. Joining us now to talk about the market consequences, Pooja Kumra, the European and UK rates senior strategist at TD. Pooja, what are you telling clients this morning after those results over the weekend?
Thank you. I don't think we are any more knowledgeable after the results that we got through. I mean, they were exactly what we saw in the election polls, and that's why you are seeing French versus Bund spreads actually tightening. It's not that we are actually excited about the results. I think as something that you were mentioning, I think it's all about this round two that we are going into, and what we think in terms of what could happen is a hung parliament with an RN majority or an absolute RN majority, or a hung parliament which has a very bad split with the 3 parties. Our base case is still for a hung parliament which has RN as the main leading bloc, which would actually see a cohabitation government, which we just mentioned. But I think coming back to what it means for the the rate space. I mean, 10-year OATs versus bonds are actually around 75. This compares to something like 45 basis points that we saw ahead of the elections. Are we getting back there? I don't think so, no matter what the scenario is. I think we will be around the 60 to 70 basis points range here. What markets need to know is that what exactly comes in terms of fiscal, and that's likely to be in September when all the countries will have to submit their budget plans to the European Commission. And that's also when you could see more rating reviews actually happening for France and all the French-linked assets. So I think that is the next key big thing for Europe. And the uncertainty is likely to maintain. But I think as we head towards September, focus will be more on the US fiscal versus the French fiscal.
Pooja, I'm wondering at this point, is France alone, right? I mean, is France the outlier here, or is it kind of one of the leaders? I mean, you're looking at Italy, then you're looking at France, you're looking at this upswing of the far right in Germany as well. How much is this sort of what will become the status quo in Europe that's going to really affect the rates market of a host of other European nations?
No, that's a great question, especially the results in France as well as Germany, as you mentioned, have been pretty shocking. But I think if you look at the European parliamentary elections as a whole, the entire move towards right wasn't that extreme as compared to France and Germany. So it was basically a 4 to 5% shift. But we also need to see, what does the new right mean? Like, Italy's Meloni has done a great job representing the new right, and they are no longer that extreme. And I think that is particularly driven by the fact that everyone takes Liz Truss as an example. And I think that's why, UK election is getting no traction, because everyone is so scared on going big on fiscal. So yes, we are shifting. I think primarily because everyone wants a change, but they still want very centrist view. And the new right in Europe is more towards the center. Again, we need to see how Le Pen plays it, but so far her views have not been as extreme.
Pooja, there's a problem in Europe when we start talking about acronyms at the ECB. TPI, Transmission Protection Instrument. What would activate that kind of action from the ECB? If it's not 80 basis points of spread between France and Germany, what is it?
So, I mean, if we do see the spreads actually going above 100 basis points, yes, the TPI could be activated. But just to give you some background on TPI, France needs to abide by fiscal rules to actually use this tool, to get the benefits of this tool. So if Le Pen, for example, comes back to her plans of spending that we saw in 2019, I don't think ECB will be ready to actually support OAT spreads here. So I think that is something that even France knows, that if it wants to benefit from, say, the NGO money that it's getting in terms of loans and grants, or this TPI tool, what is required is actually abiding by the fiscal story.
Pooja Kumra of TD. Pooja, thank you. Something very, very European about this, uniquely European about this bond market development, right?
Well, essentially that you have to be appropriate, and if you're not appropriate, you're not going to be on the receiving end of some of these programs. So you have to be within our rules, and otherwise you don't get the benefits. At the same time, you wonder if things widen out enough, if they get the benefits anyway, because essentially they are here to close spreads.
It's amazing how the Liz Truss scare of the last couple of years seems to shape politicians, not just in the UK, but elsewhere too.
I'm glad you picked up on that. I wonder the degree to which it will. And I think that this is a faith that's being baked into markets that we've been asking about for a couple weeks. Is there some sort of market put on any of the fiscal proposals for whether it's Donald Trump or whether it's Le Pen? This is an ultimate question that we don't have an answer to, but it's a belief baked into markets that they will respond to a market tantrum.
Yields, spreads between Germany and France a little bit narrower this morning. Let's get you an update on stories elsewhere with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Boeing has agreed to buy back supplier Spirit Aerosystems for $37.25 a share. It's an all-stock deal that values the company at $4.7 billion as Boeing looks to fix manufacturing defects. It also undoes a 2-decade separation of the two when Boeing in 2005 spun off Spirit as an attempt to trim costs and outsource assets. Now, as part of the current deal, rival Airbus will also take over parts of Spirit. That transaction is set to close in the middle of next year. Mercedes is boosting spending on gasoline engine models after first generation of EVs fell short. CEO Ola Kalania said that in an interview that it needs flexibility for longer into 2030s, but it will not impact the goal of going carbon neutral by 2039. EV demand has slowed in Europe, where BMW is also facing similar issues. They also face the threat of cheaper Chinese EVs, even with new tariffs in place. And England somehow snuck through to the quarterfinals of Euros 2024 with a 2-win nail-biter win over Slovakia yesterday. England trailed for much of the match against the 45th ranked team, but a last-minute equalizer, an over-the-head equalizer, I should add, from Jude Bellingham sent the match to extra time before Harry Kane found the decisive goal for England. They'll now meet Switzerland in the next round. Spain will meet host Germany after their 4-1 win over Georgia. In today's matches, France takes on Belgium and Portugal, Slovenia. And that's your brief, John.
Danny, thank you. Just a ridiculous weekend of sport. And more to come. Up next on the programme, stuck in the rearview mirror.
I do worry that the more likely error right now is that the Fed will not start cutting early enough and then will be forced into cutting aggressively. A forward-looking Fed would certainly have the possibility of a July cut on the table.
Much more on that analysis in just a moment. From New York City, you're watching Bloomberg Surveillance.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the This is Bloomberg.
Kicking off Q3 in a brand new trading week with stocks just about positive by 1/10% on the S&P. Bond yields a little bit higher, just a single basis point on a 10-year in the US, 440.99. Under surveillance this morning, stuck in the rearview mirror.
I do worry that the more likely error right now is that the Fed will not start cutting early enough and then will be forced into cutting aggressively, but it's not going to have the impact in terms of slowing or moderating the slowdown, and then will overshoot on the way down yet again. A forward-looking Fed would certainly have the possibility of a July cut on the table.
So here's the latest. Investors looking ahead to a busy week, headlined by comments from Fed Chair Jay Powell tomorrow and the US jobs report on Friday. Michael Dada of Roth MKM writing this: the hallmark of good central banking is to try to be forward-looking, so that the slippage between the neutral rate and the policy rate is kept to a minimum. Reacting belatedly is nothing more than a setup for a rinse and repeat, boom to bust set of cycles. Michael joins us now for more. Michael, wonderful to catch up with you, buddy. You're one of the very best working out where we are in these cycles. Can you tell me what's flashing red on your dashboard right now? What is it?
Thank you guys for having me on. I appreciate it. Well, look, I actually just took a look at the Bloomberg Surprise Index, so I'll give you guys that prop. It's rolling over, right? We've had a raft of pretty weak data. We're going to get some additional manufacturing figures this morning, but housing's been rolling over. We're starting to see some upward pressure on jobless claims. First-time claims still look pretty healthy, but continuing claims are actually about 35% off the lows of the cycle. And despite pretty strong headline payroll growth, the unemployment rate is moving up. It hasn't jumped drastically, but we're 0.6 off the lows. And if you go back historically, it's very unlikely that you see something like that without the beginning of a recession not far off, or actually, in it, and you don't realize it. And so I agree with the quote from Mohammed that you played earlier. I think that the risk here is because the Fed is dealing with the aftermath of this 2-year inflation overshoot, once bitten, twice shy. Most likely, I think they're going to be a bit late and a bit behind the curve here.
Michael, when clients say we're just normalizing, that's all this is. We're just normalizing. It's nothing worse than that. How do you counter that point?
Yeah, well, I think it really, normal depends on the state of the business cycle. And so the first mistake the Fed made, I think, was a bit of a primacy recency bias. So the previous cycle was very low inflation, very low growth, in a long period of very low rates. And so the Fed really acted aggressively. Fiscal policy was much more aggressive. And no one wanted to believe that we were in a V-shaped recovery with high inflation. So it took a while for the Fed to acknowledge that, and they were way behind the curve. And so normalizing meant raising rates much more and then holding them higher. And now things are decelerating. We haven't totally fallen off a cliff just yet. But if the cycle continues to weaken and the Fed is just standing pat, then you have essentially a passive tightening in monetary conditions. And that's the end of the cycle. So business cycles don't last forever. And the reason for that is it's very difficult for the Fed to be precise in tracking the neutral interest rate. And Powell talked about this in the last press conference. So normal is very much a relative term. It depends on the state of the business cycle. So, 5.25% to 5.5% policy rates, a year ago may have been appropriate. But moving into the fall, that might be much too high for the state of the labor market.
Given all of that, and given the data that we have coming out this week, what's the most important that you're looking at to really gauge how urgent the Fed should feel about cutting rates?
Yeah, I think the labor market data on Friday should be interesting, and whether we end up seeing this divergence between the two labor market surveys being resolved, anytime soon. So the unemployment rate comes from a separate survey of households. It's generally viewed as not as reliable, but it does tend to move at turning points. And the unemployment rate itself is really only revised once. So as a singular summary statistic, I think it's a super robust, coincident to slightly lagging indicator, and can at least confirm what's happening to the business cycle. Are you growing at trend, above trend, below trend? If the unemployment rate is inching higher, that's a very strong signal that the economy potentially is, if it is growing below the growth rate of potential. And so that should potentially be setting off some alarm bells at the Federal Reserve. And, they are watching it, but, other data has looked more robust. So there's a debate going on.
Mike, what's the signal for markets right now? We talk about the divergence between the benchmark index level, the S&P, up almost 4% in the second quarter, even though equal weight was down about 3%. Is this a feature of the market strength or a bug of that market strength?
Well, I think it's both. It's a feature of the AI frenzy. So the S&P 500 has had just tremendous gains, and those have been driven essentially by 6 or 7 stocks in 2 sectors. On a year-to-date basis, the small caps are sucking wind, transports are weak, and so those areas might tell us more about the state of the U.S. business cycle than what's happening with the S&P 500, which is so AI driven at the moment. And so it is an interesting divergence. I mean, the transports have been underperforming the S&P 500 in a way that you see at the end of business cycles. And so that's definitely something to keep an eye on. If we can think in a multi-year, over a multi-year horizon, few can do that. But, I think some of these areas that have lagged, in particular the small caps, I do think if we're thinking in a 5 or a 10-year framework, I think there's more upside there than maybe some of the areas that have performed so well. And I'm not saying, step out there and start shorting tech stocks today. I mean, anyone who's tried to do that has been totally run over. So, a frenzy, the old quote is they go much further than you think, but they don't correct by going sideways. So, dangerous game there. But I think if we're thinking longer term, we probably have to pull in the expectations for the S&P 500 and then maybe be a bit more optimistic about some of the areas that have lagged.
I was going to say that's what we call a trade for the brave. Michael Dada of Rotham Cam. Mike, good to catch up, sir. Thank you. Chairman Powell speaking tomorrow, July 31, the next Fed decision. Then you've got to wait to September 18th. Yeah. You get some forecasts, new projections. Jackson Hole in between is September, the one people are focused on now.
Yeah, maybe we should just join Michael Dardo with his surfing poster in the background. I kind of want to go where he's going.
Tom Hanks movie in the background too?
Well, that movie, The Endless Summer, documentary about surfing. Highly recommend.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. Mm-hmm. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Or other authorities.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
After 2 years of essentially no earnings growth, we are back to an earnings growth pattern.
I think you have to play the game. A momentum market is not one to stand in front of. It's like standing in front of a freight train.
That kind of weakness under the surface breeds opportunity. So when you have that poor breadth, at some point, you start to see an improvement.
That will, I think, happen. What goes up will come down, and there will be mean reversion.
When does the breadth change? When does things broaden out? And what we think is it has to get worse before it gets better.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Hello, Q3, live from New York City this morning. The second hour of Bloomberg Surveillance begins right now, with equity futures positive by 0.2% on the S&P 500. Payrolls on Friday, next Thursday CPI. Stuart Kaiser of Citi with this to say, payrolls more important than CPI in July.
I would agree with that statement, just simply because we've seen the Federal Reserve shift their focus to potential weakening in the labor market. And it seems on the pendulum of Fed priorities, the idea of labor, the idea of jobs is more important right now than CPI that's coming down but hasn't reached their target just yet.
And within the payrolls report, is the unemployment rate on Friday more important than the headline number? The headline number on Friday, 190. The unemployment rate, 4%.